Also remember to mute yourselves currently.
Representative Peirce, I'm waiting for Senator Ben Chipman. I don't see him on this. Oh, there he is. Great, I got him. All right. Good morning, everybody. My name is Kathy Breen, and I want to welcome you to the public hearing on the governor's proposed supplemental budget. We are gathered today as in a joint public hearing with the Joint Standing Committee on Appropriations and Financial Affairs, otherwise known as AFA, and the Joint Standing Committee on Taxation, otherwise known as TAX. So we have collectively about, I think, 26 legislators joining us today on Zoom. The committee is assembled electronically for the purpose of hearing the governor's proposed budget and for taking public comment on this proposed legislation. Before we get started, I want to share some information related to the fact that this meeting is being conducted using an electronic format. This meeting is currently being live streamed on the committee's YouTube channel. This means that anyone who is a participant in the meeting via Zoom can be seen and also heard if their microphone is unmuted. People testifying cannot be seen or heard until they are called upon. But for members of the legislature and members of the administration who are currently panelists and whose faces and names are up on the screen, you should know that if you're not on mute, then whatever you say is being broadcast live on YouTube. So if I hear some background chatter, I might take the liberty of muting you myself, just as a courtesy. This meeting will be recorded and it will be available to the public to view on the committee's YouTube channel soon after this meeting has concluded. In a moment, I will have committee members introduce themselves, but before I do, I'll ask committee members to keep their mics muted until I call on you, or in the case of the tax committee, until Senator Chipman calls on you. I also want to take this opportunity to remind committee members to check to make sure that your name is displayed correctly on Zoom. For example, it should say Representative Peirce or Commissioner Figueroa, and not things like iPhone or dad's laptop. If you click on the three dots at the top right of your Zoom square, there's an option to change how your name is displayed. Please be sure the name that appears on Zoom is the same name you used to register for this hearing. If it isn't, we might not know to call on you. So please take the time to check this now. And I'll just repeat that since we're doing a joint committee hearing, that I would request that folks not only put their title in front of their name, but then put their committee, comma, committee, either AFA or tax in that title as well, so the public knows who's on which committee. Thank you for that. And I now will turn to my committee members and ask them to introduce themselves. So I am going to start with Representative Hymanson.
Hello. I'm tucked away behind this picture. Do we get video or do you want us off video for this?
Why don't you do video to introduce yourself?
Okay, I can't.
They're not allowing it for some reason, so
Oh,
we need to
okay.
figure that out.
Okay, well, for now, I'll just hide behind this picture. So I am Representative Patty Hymanson. I represent District 4, which is parts of York, Wells, Sanford, and all of Ogunquit, and I'm on AFA.
Thank you. Representative Corey.
Good morning. I'm Patrick Corey. I represent House District 25, which is part of Wyndham.
Thank you. Representative Fay.
Good morning. I'm Representative Jessica Fay. I represent House District 66, which is parts of the towns of Raymond, Poland, and Casco.
Thank you. Let's see. Representative Arata. And everybody, I just, oh, Representative Arata is locked out. I think I should let her in. Not seeing a message from the Representative Arata, but I'm looking. As you can tell, folks who are watching, this is a new format for the legislature, and we are learning as we go. And we ask for your patience and your forgiveness and your sense of humor. Let me see. Mandy is our clerk, and I'm wondering if we have Representative
It's
Arata.
working now.
Oh, good.
It said that the host was not allowing us to unmute ourselves, but now apparently we are. And so good morning, everybody. My name is Amy Arata, and I represent District 65, which includes New Gloucester and part of Poland.
Thank you, Representative Arata, for your patience. And I'm also advised that committee members can also turn on their video now if you'd like to do that as you introduce yourself. I'm looking for other members, House members of AFA. Representative Cloutier.
Thank you, Madam Chair. I'm Kristen Cloutier. I represent House District 60, which is part of Lewiston.
Thank you. Do we have Representative Martin here? Representative John Martin? Don't see him yet or hear him. How about Representative Fecteau? Is Justin Fecteau with us yet? All right, apparently he will be joining us. Represent my Senate colleague, Senator Davis.
Good morning, Madam Chair, and thank you. My name is Paul Davis. I represent Senate District 4, which is all of Piscataquis County and parts of Somerset and Penobscot.
Thank you. And is Representative Millett with us from AFA? Representative Salwin Millett?
He's not in here, ma'am.
Thank you so much. How about my other Senate colleague, Senator Bailey?
Thank you, Madam Chair, and good morning. I'm Donna Bailey. I represent Senate District 31, which includes the city of Saco and the towns of Old Orchard Beach, Hollis, Leamington, and part of Buxton. I'm a member of AFA.
Thank you. And my House co-chair, Representative Peirce.
Thank you, Madam Chair. My name is Teresa Peirce. I'm the House Chair of AFA. I represent House District 44, which is the majority of Falmouth.
Thank you.
And just a
Go
couple
ahead.
people are trying to get in on their Zoom of our members, so we may need to go back to them.
Okay. I'm not getting the notice to let folks in. I assume that Mandy is and that she is doing that.
Yes, I'm taking care of that.
Thank you. So
You're
do
welcome.
we have Representative John Martin or Representative Justin Fecto with us yet? No. Okie doke. Well, I'm Kathy Breen again, Senate Chair of Appropriations, and I'm going to turn it over to Senator Chipman now to lead introductions of the Committee on Taxation.
Thank you, Senator Breen. I'm Senator Ben Chipman, serve as the Senate Chair of Taxation Committee, and I represent Senate District 27, which is most of the city of Portland. And we've got a few of our members with us as well. I'm just going to go down through the list because I can't see everybody who's on the meeting, but is Senator Daughtry with us? I don't see Senator Daughtry. Senator Pouliot, are you with us today?
Yeah, good morning. State Senator Matt Pouliot, Senate District 15, represent the towns of Augusta, China, Oakland, Sydney, and Vassalboro, and the lead Republican on the Tax Committee for the Senate.
Great, thank you. Is Representative Terry, I think you're with us, right?
I am. Thank you, Senator Chipman. My name is Maureen Terry. I represent District 26, the west side of Gorham, and I serve as the House Chair on the Taxation Committee.
Excellent. Representative Bickford, are you with us? Representative Carmichael, I think you're on. I think I saw you.
Yes. Good morning, Representative Mickey Carmichael from House District 137. I represent 18 small communities in Hancock, Penobscot, and Washington County.
Welcome. Representative Collins, I don't believe is with us. Let's see.
Yes.
Are you here? Great.
Yes.
Introduce yourself.
Good morning. I'm Representative Benjamin Collins. I represent House District 42, which is part of the city of Portland.
Okay, Representative Gramlich. Is Representative Gramlich on here?
Yes, good morning, Senator. Thank you. I am Lori Graham. I serve on the Taxation Committee as well as the Environment and Natural Resources Committee. I represent House District 13, which is the lovely seaside community of Old Orchard Beach.
Okay. Representative Hanley. Representative Hanley with us? Don't see him. Representative Kryzak, I know you're here.
I am. Thank you, Mr. Chair. I'm Ted Kryzak. I represent District 20, Acton, Lebanon, and part of Shapley, and I'm the Republican lead from the House.
Representative Matlack is not with us this morning. I got a message from her. She chairs another committee that meets right now. Representative Perry, is he with us? I don't see him. And then Representative Sachs, I believe, is here.
Good morning, everyone. Thank you, Mr. Chair. My name is Melanie Sachs. I represent House District 48, which is Freeport and parts of Pownell. Thank you.
Excellent. Thank you. So that's all the members of the Taxation Committee.
Thank you, Senator Chipman. And we are also joined by Representative Cardone, who is a representative House member on AFA. Representative Cardone, would you like to introduce yourself?
I'm Barbara Cardone. I represent House 127, which is part of Bangor.
Thank you very much. Have we heard yet from Representatives Fecto or Martin? No, thank you. Okay, so there are some ways that this is very different than our usual way we do business, but there are some ways that are the same. And one of the ways it's the same is that our committee members often have commitments outside of this particular meeting. In some cases, they are appearing with their own bills in front of other committees. Or they might serve on several committees and have hearings, not only in this committee, but in another committee. So to the extent that you see committee members coming and going from the screen, putting their faces up only, or departing altogether, we're not attending. It's because we have various places to be. And even with this technology, we have not yet figured out how to be in 2 committee rooms at once. So rest assured that all of the testimony we hear today from the presenters and from the public is something we all take very, very seriously, and will be recorded and will be at our fingertips at all times. So the other thing I want to remind the public of is one way to offer your perspective on legislation is through a public hearing. That's not the only way. Of course, the legislature remains available to folks through our email addresses and through our office phone numbers. So if you want to provide us with your feedback on the bill today and the bill this week, you can participate in this public hearing and offer it in the context of the Zoom meeting, but you can also email us at www.mainelegislature.org, and that will get to us in the regular course of business. So let's start now. Before we start taking public input, I'd like to I'd like to check in with my co-chair, Representative Peirce, and make sure that I have properly done my introductions, my housekeeping, and all of that stuff before we proceed to hear the bill before us.
I think you've covered everything that was on my checklist, and I appreciate you asking for people's patience and humor as we do our first one ever. Here we go.
Thank you.
Thank you.
And also, committee members, I would suggest that if something comes up in the course of the hearing and you want to raise your hand, I would suggest that you use the raise hand function that's at the bottom of your screen. And this is wise, because that will pop you up immediately right next to my head, and I will see it very quickly. And that's a really good tool for me to see right away that you have a question. Of course, you can also just shout out, Madam Chair, just like you could in a committee room. Always happy to be interrupted if there's any sort of business or logistics or any sort of needs on that behalf of the committee on how we're proceeding with the meeting today. So don't be bashful. So the way we're going to do this today is like any public hearing. We're going to have the sponsor, which is the administration, introduce the bill. Unlike a lot of other committees, we're going to work on one bill the entire week. So it's the supplemental budget proposal, which you can find various places in the OFPR website and in the Bureau of the Budget website. In addition, the administration has forwarded their documents that they're going to talk about today to our analyst, Maureen Dawson of OFPR. And so Maureen can put those in the chat, or members can go to the OFPR website where you should see those documents listed under today's date and numbered. And I see Maureen Dawson coming on, maybe to correct me. Maureen, what would you like to add?
That I have not been able to post the files in the chat room for whatever reason. This webinar is not allowing that. So you'll have to go into your emails and pick them out. It should be a very recent email. If you sort by date, it should be on top. So you'll have to do it that way. I apologize. We just, for whatever reason, can't get that done.
Okay. And Maureen, are the documents in the email labeled in a particular way that
They are labeled A for her commissioner's testimony, then A1, C, D, and B. They all have today's date and text. And they're all PDFs.
Wonderful. And just a note on the document, for folks who are new to Zoom, you can go up to view at the top of your menu and you can change the way you view this meeting. So you can open up your email and view the meeting at the same time. And now I see we're joined by two distinguished gentlemen on the committee, Representative Martin, Representative Millett. Representative Martin, would you like to introduce yourself, please?
Thank you. Yeah, John Martin. Actually, I was on the committee Inland Fishes and Wildlife. So we just moved over. And John Martin, House District 151, representing Western Aroostook County.
Welcome. Representative Millett. Could you unmute yourself, please? Thank you. Yes.
So in Millett, House District 71, Norway, Sweden, Waterford, West Paris. This is my third Zoom meeting of the morning, so I'm happy to join you.
Thank you, Representative Millett. Representative Peirce.
Thank you, Madam Chair. I would just like Maureen to remind the public how they might access the documents should they want to, and when those might be posted.
I believe they're being posted even as we speak by our talented director, Christopher Nolan, and they can be accessed on the Legislative Maine website. If you go to committees and pick AFA and pick the materials page out of that, then you should be able to readily see where those are posted. So,
thank you.
If anybody has any difficulty finding them, they can email me and I'll help them.
And again, they're going to be organized by today's date. Is that correct, Maureen?
That is correct. Today's date, and you'll see to date, tax, and then what it is, attachment A, attachment A1, etc. And a little description in most cases of what it is.
Great. I'm hearing from members of the public that those are posted now. So that's good news. So any questions from any committee members before we call on the DAF's commissioner to begin their presentation? Representative Martin, I just want to remind you to mute yourself, please. Any questions from any committee members, please use the raise hand function so that I can see you immediately. Okay, I don't see any, but again, if you're confused, if you need help navigating, ask Representative Peirce. Just kidding.
Hey, thanks, I appreciate
that. Just let us know. So again, I want to thank everybody here for their patience, for their humor, for their flexibility, and just again, remind the public that our goal is to be as transparent or even more transparent than we have been when we are live and in the room. So please, again, forward us your constructive suggestions and feedback if you have any. All right. Commissioner Figueroa, welcome to the joint standing committees on appropriations and tax. So glad to see you. Thank you for getting your materials to our office beforehand. And just as before you start, I just want to tell the committee that Commissioner Figueroa and I have worked out this, lettering system so that she's going to be in the best of circumstances, reminding us which document she's on as she talks about them. But of course, sometimes we still get confused. So if you have a question about which document we're talking about, don't hesitate to raise your hand and ask, and we will stop and make sure everybody is following along with the right document in front of them. So I'm going to stop talking now and turn it over to Commissioner Figueroa.
Good morning. And I echo the appreciation for the grace of technology and patience. I do want to start out by thanking Maureen. I just I think it was 9:59:59. So thank you very much, Maureen, for your quick turnaround of those documents. Okay, so I am on attachment A, which should be labeled as the tax testimony for the supplemental budget. Good morning, Senator Breen, Representative Peirce, and members of the Joint Standing Committee on Appropriations and Financial Affairs, Senator Chipman and Representative Terry, and members of the Joint Standing Committee on Taxation. My name is Kirsten Figueroa, and I am the Commissioner of the Department of Administrative and Financial Services. I am here today to present the fiscal year 2021 supplemental budget bill. Governor Mills has submitted to the legislature a supplemental budget proposal for fiscal year 2021 and a biennial budget proposal for fiscal years 22 and 23 that focus on maintaining vital services and increasing savings without creating new programs. The budgets are balanced as required by the Constitution and include efficiencies, good fiscal management, and curtailments to cover projected revenue shortfalls for all 3 fiscal years. The budgets do not change main tax rates and do not dip into the Budget Stabilization Fund. In fact, they add to the state's savings in order to plan for a future made unpredictable due to the continuing ongoing pandemic. The proposed budgets focus on combating COVID-19 by continuing to rebuild the state's public health infrastructure and protecting essential health care, education, and life-saving services. Before we get into the specifics, it's important to recap the last year. First, in March 2020, the governor worked with the legislature to enact a bipartisan supplemental budget limited in scope to primarily address the needs of COVID-19, which reduced spending commitments and set aside at that time $184 million. Second, also at the onset of the pandemic, the governor instructed departments to implement frugality measures, including freezing certain hiring and restricting access to unencumbered balances. Those measures remain in place today. Due to the substantial impacts of COVID-19, the Consensus Economic Forecasting Commission and the Revenue Forecasting Committee met for off-cycle reports during the summer. On September 9th, 2020, we identified $422 million in strategies to put the budget back in balance, including a $222 million curtailment order later signed by Governor Mills. Throughout, Governor Mills has successfully solicited and strategically utilized federal pandemic relief, which has brought more than $8 billion to Maine, significantly stimulating Maine's economy. Of this approximate $8 billion, nearly $4.7 billion was awarded directly to Mainers and Maine institutions, such as the Paycheck Protection Program, provider relief, higher education systems, etc., while approximately $2.8 billion passed through state government, the majority of which was enhanced unemployment benefits and the $1.25 billion in coronavirus relief funds. I want to specifically call out the $1.25 billion in federal corona relief funds, CRF, which Governor Mills dedicated strategically and transparently. You can review all of the details of CRF efforts through the governor's numerous press releases and via a page on the Bureau of Budget's website, specifically dedicated to COVID-19 federal funding. As you'll see there, the administration provided significant funding to Maine's public school systems to help them provide safe in-person learning opportunities and to adjust to hybrid or fully remote learning opportunities, including purchasing remote learning devices for students and partnering with internet service providers to expand broadband. Additionally, the administration harnessed CRF for the state's response to COVID-19 and related public health and safety efforts, including procurement of PPE for Maine's healthcare network, grants for municipalities to deploy public health and prevention programs, childcare, pandemic assistance for people who are homeless, minorities, food insecure, and otherwise marginalized, and a strong COVID-19 testing and laboratory infrastructure. Additionally, the governor committed nearly half of Maine's CRF to support Maine's small businesses and workers. The administration provided $294 million to bolster the Unemployment Trust Fund, thereby avoiding a large hike in costs to Maine employers, and provided more than $250 million in economic recovery grants to help sustain business operations. Just as we were wrapping up the commitment of CRF, and as part of its traditional December report, thanks in large part to the stimulating impact of federal relief, the RFC boosted its previously downgraded revenue forecast, projecting a $255 million shortfall for FY21 as a result of COVID-19, up from their originally predicted shortfall of $528. Similarly, the RFC ratcheted up expectations for 22 and 23, projecting a $396 million shortfall for the biennium as a result of COVID-19, up from their originally predicted shortfall of $883 million. Though still below pre-pandemic figures, the COVID-related shortfall we were initially expected to experience in just one fiscal year has now in effect been spread over 3. It is this hard work amid the global pandemic to keep the ship steady that makes it possible for Governor Mills to submit to the legislature balanced proposals that cover shortfalls caused by the pandemic for this current fiscal year and for 22 and 23, and to maintain critical services so important to Maine's family at this time with a focus on combating COVID-19. These budgets include initiatives to maximize federal and other resources, implement administrative efficiencies, utilize unobligated balances, balance certain increases in departmental spending with reductions elsewhere, and continue critical investments in healthcare, education, public health infrastructure, and economic and workforce development. Now to outline this fiscal year supplemental. On page 14 of the testimony, we detail on one sheet the revenue forecasting changes, the supplemental initiatives that affect transfers, deappropriations, and appropriations, and the balance we will carry forward into the next biennium. We have also included this separately as attachment A1, FY21 Supplemental Budget Summary. Specifically to transfers, this budget proposes an infusion of $41 million to the Budget Stabilization Fund, bringing the total to just over $300 million. And after returning $14.5 million in the Medicaid Stabilization Fund back to the Fund for Healthy Maine, this proposal adds $25.5 million to the Medicaid Stabilization Fund for a total of $40 million in that fund to help plan responsibly for Maine care expenditures. Specifically to the deappropriations, the supplemental budget proposes to deappropriate the items outlined in the curtailment order signed by Governor Mills on September 17th, 2020, for a total of $125.1 million. These items are the result of improved federal Medicaid reimbursement, FMAP, for FY21 quarters 1 and 2, switching funding sources for departmental functions, and managing expenses through hiring freezes for certain vacant positions, delaying technology upgrades, reduced spending on existing or future contracts, canceling conferences, postponing and reducing travel due to COVID-related moratoria, delaying projects due to the shifting priorities as we work on providing for the well-being of Maine citizens during the pandemic. An additional $64.9 million deappropriation due to the continued enhanced FMAP as a result of the ongoing declared state of federal emergency is also proposed for the third quarter of this fiscal year. The details of the curtailment items are exactly as outlined in the document distributed on September 17th, and I believe recently redistributed by Maureen. Also, as part of the curtailment order, we use a one-time infusion to the general fund of $96.7 million from the CARES Act Corona Relief Funds for allowable payroll costs for certain public health and public safety employees whose services are substantially dedicated to mitigating or responding to the COVID-19 public health emergency. As such, as I testify on the supplemental throughout this week, we will refer to these in broader strokes of curtailment initiative, rather than reading each of the individual lines from the supplemental. Of course, at any time, should someone desire additional details, just ask and we will bring those to the work sessions. Specifically to the appropriations in the supplemental, there are 12 initiatives in 5 departments that will be detailed over the week. And finally, there are revenue reductions, the result of the tax conformity proposal relating to federal changes through the CARES Act and the Consolidated Appropriations 2021 Act. The bottom line of the proposed FY21 supplemental, as adjusted today with the change package relating to tax conformity, is a balance of $44.2 million carrying into the 22-23 biennium. Now to the specifics. There are 5 DAFS programs listed on today's agenda. Each of the items included represent the deappropriation of savings identified through the curtailment process that I just described. The amounts identified in the Maine Board of Tax Appeals and the Mandate Betty Reimburse Municipalities programs can be found on page A-4. Savings from the Bureau of Revenue Services, also known as Maine Revenue Services, and the snow grooming property tax exemption reimbursement can be found on page A-5. And finally, deappropriation of funds from the waste facility tax reimbursement program as a result of curtailment is on page A-7. Excuse me. These savings were identified after a review of projected expenses for fiscal year 2021 and do not result in a loss of services. The deappropriations in the Maine Board of Tax Appeals, snow grooming property tax exemption reimbursement, and waste facility tax reimbursement are proposed to continue in the next biennium. Now we will move to the language document. Sorry, I meant to mute. Technology. The most notable tax item in the supplemental budget is Maine's conformity to federal tax legislation enacted during 2020 and the decoupling from a few of those federal changes. The supplemental budget, as originally submitted on January 8th, did not address all of the federal legislation because substantial federal tax provisions were enacted in the Consolidated Appropriations Act 2021 on December 27th, just 9 days before the budget proposals were due. An interesting side note, the Consolidated Appropriations Act 2021 at 5,593 pages is the longest bill ever passed by Congress. The review is now complete and the updated proposal for conformity is submitted today as a change package to the supplemental. I think I am meant to say here. Oh, nope, I do it later. Annually, the Department of Administrative and Financial Services submits legislation or language to update the reference to the United States Internal Revenue Code in Title 36 of the Maine Revised Statutes. The Maine legislature then reviews federal law changes to the code since the last conformity date to determine whether it wants to conform to some or all of the federal changes that impact Maine's tax laws. This so-called static conformity is the result, in broad terms, of the Maine Constitution's prohibition that the legislature not surrender the power of taxation. The legislature has enacted a limited number of provisions where the state automatically conforms to federal code amendments without the need for additional state legislation. I want to draw your attention to the fact that the economic disturbance caused by COVID-19 and the federal government's extraordinary response have created completely unfamiliar situations and given rise to unprecedented questions of tax policy, and acknowledge the tremendous work the Maine Revenue Services staff has done these last 10 months. Most of the workload and staffing at MRS are dedicated to tax administration and led by the Executive Director, Jerome Gerard. The Office of Tax Policy is responsible for providing legal and economic analysis for the administration's tax proposals and legislative bills. This group is led by Associate Commissioner for Tax Policy, Dr. Michael Allen. As previously mentioned, MRS and the legislature deal with issues of tax conformity annually. Each session, this department presents the Joint Standing Committee on Taxation with a tax conformity bill that typically contains minor changes, affects a limited number of taxpayers, and is of minimal fiscal impact. That is not the case this year. The Families First Coronavirus Response Act, FFCRA, the CARES Act, and the most recently, the Consolidated Appropriations Act 2021, CAA, all included significant tax provisions applicable to the 2020 tax year at the federal level, as well as tax years forward and back. Tax conformity is being considered within the supplemental budget because it is of urgent importance of taxpayers filing their 2020 tax returns. Many of the treatment changes were extraordinary in order to stimulate the economy. They are of sizable financial consequence to a great many taxpayers who have fallen on tough times as a result of the pandemic and its implications. And some will demand difficult decisions because of the negative fiscal impact they would have upon the state budget. The MRS staff has done yeoman's work to thoroughly review these massive pieces of federal legislation, analyze their impact on taxpayers, reconcile them with existing Maine law, and estimate their fiscal impact so that the administration could bring forth a well-informed, thoughtfully considered recommendation to the legislature. We anticipate that there are more tax changes to come. The Biden administration has already proposed another stimulus package to the new Congress, and the next round of changes are likely to come in the middle of this legislative session, and we will be in touch about that. Meantime, we are braced for this tax filing season to be the most challenging that many long-term Maine Revenue Services employees have experienced. The tax returns filed this spring will reflect the economic upheaval experienced in 2020. Taxpayers will have much to navigate, like learning that unemployment benefits are taxable, or the implications of living or working remotely in a state different than before the pandemic. If individuals' circumstances have changed, so too will the tax returns they file and their bottom line. Maine Revenue Services has always taken tremendous pride in providing exceptional customer service, and MRS staff will continue to work through these emerging issues with taxpayers and tax preparers as they encounter them. But we need to collectively recognize the incredible challenges to taxpayers, tax preparers, and Maine Revenue Services this filing season. The governor knows that taxes can be complicated enough without taking into consideration the added anxiety of a public health crisis and all the resulting tax code changes from recently passed legislation. In a tax season that is sure to be like no other, Maine Revenue Services stands ready to assist Maine people and businesses who may need to discuss payment plans or request a waiver of penalties or interest due to personal circumstances resulting from the pandemic. And we encourage filers to reach out to us sooner than later to begin those conversations. The IRS will open the tax filing season on February 12th, and Maine's dedicated public servants are available now and then to confidentially, accurately, and efficiently process state returns, refunds, and extensions. From a high level, this conformity effort was undertaken with the intention of maintaining a degree of stability and predictability for individual and corporate taxpayers in Maine, to conform to the federal changes as much as possible, and to provide tax relief to Maine families and businesses during the ongoing COVID-19 pandemic. The proposal reduces the burden for Maine families and businesses by preserving the power of the Earned Income Tax Credit, which provides tax relief to middle and low income families with children. Expanding the educator's expense deduction for Maine teachers, which allows them to deduct unreimbursed expenses for classroom materials, now including personal protective equipment, disinfectant, and other COVID-19 related supplies. Maintaining standard treatment so no Maine businesses owe state taxes on Paycheck Protection Program proceeds spent to keep employees on payroll and or on other deductible expenses such as rent or utilities. The administration would have preferred to fully conform to the federal government's double benefit on this program, but at an estimated cost of $100 million, it was not able to do so and balance the budget without additional federal aid to the states, such as that which Congress recently rejected. The proposal extends the state tax credit for Maine small businesses to help them recoup costs associated with providing paid family medical leave, thereby helping them keep Maine people employed and ensuring workers have the means to quarantine, isolate, and/or care for family members amid the pandemic. It provides to family members improved tax treatment and flexibility for healthcare spending, like qualified medical expenses or telehealth costs to assist people with their health needs. Creates an allowance for any Maine resident whose work situation changed at the onset of COVID-19 to ensure they are not required to pay income tax to two states, and permits graduates to claim the Opportunity Maine tax credit, which reimburses student loan payments for completed student loan payments, even if the graduate is unemployed during the pandemic. This package maintains the governor's balanced budget and keeps Maine tax rates the same. Here, I will be referencing both the original supplemental budget language document as well as Attachment B, Tax Conformity Change Package language. Here are the specifics. Part B on page 1 of the supplemental budget language document proposes to update the Title 36 reference to the Internal Revenue Code of 1986 as amended through December 31st, 2020. These updates apply retroactively to tax years beginning on or after January 1st, 2018, and to any prior tax years as specifically provided by the code. Since the current date of Maine's conformity to the Internal Revenue Code, December 31st, 2019, the federal government has enacted several coronavirus relief laws that contain federal tax provisions with immediate Maine income tax implications and is considering enacting additional legislation. Many of the federal changes are designed to get liquidity in the hands of taxpayers by providing temporary tax cuts. The federal government is well suited to stimulate the economy and bolster employment in this way because of its ability to borrow. However, states with a balanced budget requirement like Maine don't have that same capacity. As I've said, the administration's conformity proposal is designed to avoid raising taxes and to provide tax stability while minimizing the taxpayer compliance and state administrative burdens that can result from decoupling from the code. To that end, the administration is proposing to decouple from retroactive or temporary federal changes only, specifically as follows. Part D on page 1 of the change package decouples from the temporary Coronavirus Aid, Relief, and Economic Securities Act, or CARES Act, suspension of the federal excess business loss limitation. Part E, page 3 of the change package, decouples from the temporary CARES Act relaxation of the federal business interest deduction limitation. Part F, page 6 of the change package, excludes qualified improvement property placed in service after December 31st, 2017 and prior to January 1st, 2020 from the main capital investment income tax credit, thereby avoiding the retroactive inclusion of this property. And part G, page 8.
Pardon me, Commissioner. It's the voice. It's the voice coming in. I'm noticing that my co-chair, Representative Peirce, has her hands up and wonder if there's a question related to information management or something.
Yes, thank you, Madam Chair. I just want to confirm that I'm looking at attachment B to what you sent with these changes. Is that correct? Is that attachment B? Okay, thank you. For those trying to follow along at home.
Thank you, Representative Peirce.
Yeah, this should be a 14-page document, legislative language. It's meant to replace some of the language that was in the supplemental as a result of the fact that the Consolidated Appropriations Act updated and changed some things. There are also, and I have forgotten to mention, there are also some indenting and formatting changes that are being proposed to ensure that the wording and indentation of paragraphs provides the proper context and interpretation of the language. It turns out that possibly indentations are more important in tax language than originally we had proposed. So you'll see some of that as well.
Thank you. Sorry to interrupt your flow, but.
No, not at all. That's good. Part G, page 8 of the change package, decouples from the additional charitable contributions deduction allowed to corporations pursuant to the CARES Act for taxable years beginning after January 1st, 2019 and before January 1st, 2020. Part H, page 13 of the language document conforms with the federal net operating loss limitation and the CARES Act suspension of this limitation. Putting to the side for a moment Part I, this brings us to the additional state income tax conformity implications of the late December Consolidated Appropriations Act 2021 and the administration's income tax conformity proposals in the change package, parts V, W, and X. Part V, page 11 of the change package, addresses federal forgiveness of Paycheck Protection Program loans, an issue facing state governments across the nation. Under long-standing federal and state tax law, when a loan is forgiven, it generally gives rise to taxable cancellation of debt income. This tax increase is offset by the deductible expenses paid for by the loan. While the taxable income and deductible expenses may not occur in the same year, in a general sense, they do generally offset each other, resulting in no or little net tax harm or benefit. Maine law currently operates under this long-standing principle. When the PPP loans are forgiven, they generate taxable income, which is offset by the deductible expenses, for instance, wages, that were funded by the forgiven loans, and thus ultimately paid for by the federal government. When the CARES Act was enacted, the federal government reversed this long-standing principle, excluding the loans from cancellation of debt income as part of the coronavirus relief measures. Soon after enactment, the Internal Revenue Services issued guidance requiring that the related expense deductions also be excluded, following general no double benefit tax principles. By excluding both the income and the deductions, the federal approach reached the same approximate result as current Maine law, that is, little or no net tax harm or benefit. However, the federal government changed the tax treatment of the forgiven PPP loans again with the Consolidated Appropriations Act 2021, enacted on December 27th. Now the federal government allows a double benefit, both the exclusion of the forgiven loans from income and the allowance of related expense deductions, deductions that will now offset other income. Effectively, the federal government is using the tax code to provide additional fiscal stimulus to PPP loan recipients, something that, as we mentioned before, the federal government is well situated to provide, and we applaud. But without additional funding to the states to pay for this effort, this is a conformity provision that is challenging state governments across the nation. Recognizing the serious difficulties businesses are facing as a result of the pandemic, as previously mentioned, the state has sought to assist businesses by using CRF funds to provide additional economic recovery grants, as well as depositing nearly $300 million into the Unemployment Trust Fund. For this item, the state is able to hold businesses harmless so they do not have a tax liability resulting from the PPP they received, assuming the funds were spent on deductible expenses. But full conformity to provide the same level of stimulus as the federal government would put the state's budget out of balance by an estimated $100 million. Instead, Part V of the governor's supplemental budget proposes to maintain the longstanding tax-neutral treatment of forgiven loans. This is an important and yet complex topic. So we have provided 2 illustrations. Well, I should say we've created 2 illustrations. I think we had some technical difficulties trying to get a PowerPoint presentation to you, but we will do that. But we were able to attach C-1, which is a Excel spreadsheet, and called the PPP Explainer Doc. And it looks like this.
So if you could just take a second, take a breath, and let us find that on our end, that would be great.
Can you, oh, great, there we go. Thank you. Should be labeled as attachment C. Are we good?
I have mine up, so hopefully others do as well.
All right.
Thank you for that.
We would like to orient people to the sheet by going across the columns. The first column would be a taxpayer's income and deductions, quote unquote, normal without any PPP impact. The second column would be what we refer to as the standard tax treatment of additional income and allowable expenditures. The third column will show the federal PPP treatment. And then the fourth column would show the income and deductions, including PPP items. So as you see in the first grid, that is the standard tax treatment we discussed, whereby a business would show income, for instance, $100,000, allowable expenditures, deductions of $80,000 gives you a net income or loss basis for your tax liability of $20,000. In a standard tax treatment of additional income and expenses, the second column, you would add the income and you would, quote unquote, add the expenditures. And as you take that all the way over to the right, you see that the impact matches and the bottom line remains the same. No additional harm or benefit from the additional income and the expenses allowable for that income and paid for with that income. The second grid shows the CARES Act. The CARES Act said PPP income doesn't count as income. So you can see in the third column where we start with the 100,000, we add in the 50. The CARES Act said you can take that 50 back out. So you get back over to the right column with $100,000 of income. The IRS said in a statement, if income is excluded, so too shall be the expenditures that are paid for with that income. And so you start with the 80, you add in the 50, you take the 50 back out, you end up again with $80,000 of expenditures for a bottom line that is the same. Then the Consolidated Appropriations Act of 2021, 4 days before the end of the tax year of which we are discussing, came along and said, no, wait a minute. We are confirming. The CARES Act said that PPP income doesn't count as income. The Consolidated Appropriations Act confirmed that and also allows forgiven loans to be non-taxable grant income. So the first line is the $100,000, you add the 50,000, you take the 50,000 back out of your income so that you are essentially saying as if you got 100,000 instead of 150,000. Then the Consolidated Appropriation Act allowed for deducting those allowable expenditures you paid for with that now excluded income. So you had the 80 original, you had the new 50, you were allowed to keep that 50. So now you have $130,000 of expenses against an income of 100,000, thereby changing your net income basis for tax liability from a positive $20,000 to a negative $30,000. Maine's proposal returns to the standard treatment in that the allowable income would be offset by deductible expenses paid for with that income, thereby leaving the net income basis for your tax liability the same. As a reminder, taxpayers will be able to file the federal way to their federal taxes the federal way and will adjust for their main taxes as this proposal proposes. So I know we'll have a little question session at the end, but we'll let everybody digest that and I'll continue to read and then do it that way. Okay. Because I have professionals that are at the ready for answering the questions. Okay, I just need to find my place again here. Even though this change was made just 4 days before the end of the 2020 tax year, it may be that some Maine businesses made estimated payments during 2020, assuming a double benefit for both their federal and state returns instead of just the federal. Maine Revenue Services will be administratively providing a waiver of interest and a penalty for taxpayers who are unable to pay timely as a result of this item. Again, we encourage people to reach out to their tax preparers and Maine Revenue Services. Now, Part W, page 13 of the change package, likewise decouples from similar federal treatment to certain other loan forgiveness and business financial aid assistance enacted in the Consolidated Appropriation Act 2021. Finally, Part X, page 14 in the change package, decouples from the temporary expansion of the deduction for business meals, also enacted in the Consolidated Appropriations Act 2021, for tax years 2021 and 2022, but conforms for tax year 2020. Despite decoupling from some of the more costly provisions, conforming to the remainder of the federal tax legislation does result in a revenue loss of approximately $10 million in fiscal year 2021. As an offset to the cost of conforming, Part U, page 10 of the change package, proposes to decouple from the Foreign Derived Intangible Income, or FDII, or FDII, deduction enacted by the Federal Tax Cuts and Jobs Act of 2017. The FDII deduction provides a lower effective tax rate on excess returns earned by a U.S. corporation from foreign sales. The effectiveness of this federal tax expenditure has been questioned, but regardless of its effectiveness at the federal level, Maine's conformity to the provision does not further the federal policy of preventing profit shifting. In fact, by decoupling from the deduction, Maine will still receive any benefits of the federal policy without incurring the cost. Finally, in addition to the conformity items, 2 COVID-19 provisions are also included in the supplemental budget due to their time-sensitive and emergency nature. Part I, page 14 of the language document, temporarily expands the Maine credit for taxes paid to another jurisdiction in order to provide relief to Maine resident taxpayers who are being taxed by both Maine and another jurisdiction on compensation earned in Maine as a result of teleworking in Maine due to the COVID-19 state of emergency. This part also relaxes the work in Maine requirement of the Educational Opportunity Tax Credit. In order to prepare for the February through April filing season, tax forms are developed over the fall by Maine Revenue Services and then implemented by electronic filing providers and sent to the printers at the end of the year. As such, they are now complete. Maine Revenue Services prepared the forms at the governor's direction to reflect the supplemental budget proposal, while reserving blank lines to allow for modifications to that proposal by the legislature. This approach avoids the substantial confusion that would be caused by issuing tax 2020 forms based on non-conformity, but then enacting a law that substantially conformed for that year, just as the filing season was beginning. At the same time, the forms for tax year 2020 were developed in a way that allows Maine Revenue Services to quickly update them based on any modifications to the administration's conformity proposal that the legislature makes. To prevent unnecessary complications in Maine's income tax, both for the taxpayers and the state, Maine should enact this proposal as soon as possible. The federal individual tax season will start on Friday, February 12th, 2021, when the IRS will begin accepting and processing 2020 tax year returns. Maine's filing season is expected to start around that same date. Implementation of this language results in a revenue loss of approximately $1.285 million in fiscal year 2021. The complete fiscal estimate is attached as Attachment D, Conformity Fiscal Impact. It's tiny, tiny print, but it looks like this. And down the side will be each item that we just talked about and the fiscal impact by individual and corporate, and a total column. The first set of columns are the total. And as with a fiscal note, extends out to the 23-24 biennium as well. The final language piece for DAFs is Part K, beginning on page 15 of the language document. The 2021 biennial budget included language authorizing the Department of Administrative and Financial Services to enter into financing arrangements related to the modernization of the tax collection system This part amends the dates and duration of that agreement. Now, completely changing directions, I will also, do I just finish up? I have just a little tiny bit on the treasurer's office and then.
Are you going to present the treasurer's office?
Yes.
Okay. Yes, go ahead.
Today's agenda also includes 2 items for the Office of the Treasurer of the State. Both items are changes related to the impact of the revenue forecast from December 2020. We have identified an error in the calculation of these allocation adjustments. So the numbers that I will provide you are the updated numbers. The disproportionate tax burden fund can be found on page A83. And the new number, this initiative increases the allocation by $4,285,101. This will bring the allocation in line with projected available resources for fiscal year 2021. The next item is the state municipal revenue sharing, also on page A83. This initiative decreases the allocation by a new number, $10,891,763. Both of these adjustments are necessary to bring the allocations in line with projected resources based on the December 2020 report by Revenue Forecasting Committee and incorporate changes from recommendations for tax conformity. In conclusion today, let me thank you for your attention and mention that Dr. Allen and other members of the department's tax policy team, in particular John Sagasser and Daniel D'Alessandro, will be available to answer questions related to the tax components, and Matt Colpitz, Deputy State Treasurer, is available for the Office of the State Treasurer. Amid this deadly pandemic and quite unprecedented circumstances, we remain impressed at every turn with our ability to keep the ship steady and to make good on the promises of state government, which, as you know, is to protect the well-being of our people and institutions. We are proud of this work and appreciate your partnership in it. And we welcome your questions and thank you for your support. This concludes day 1 testimony.
Thank you, Commissioner Figueroa. That was Herculean, and we appreciate it. I just want to remind everybody before we start questions and answers from the 2 committees that, as Commissioner Figueroa said, there is a lot of moving parts, and it's going to take our 2 committees and our leadership and everybody some time to digest this. We are not expecting to fully digest and comprehend it all today. So if you have any specific questions about what you heard today that you'd like to clarify or make sure you understand correctly, I encourage everybody to do that. I would ask, since there are 26 legislators here, that we really are disciplined about making sure we're asking questions and not offering opinions or commentary. We'll have other opportunities to do that. In the past, the way I've managed these, which seems to work out pretty well, is I give one committee a chance to ask questions, and then I switch to the other committee. And since the 2 people with their hands raised first are tax committee members, I'm gonna let tax committee members go first. And then I'll ask everybody to leave your hands up, but then I will tick through the tax committee members' questions, and then I will switch over to the Appropriations Committee members and ask for your patience. So Senator Pouliot, make sure you, thank you.
Thank you, Madam Chair, and thank you, Commissioner. for that great update and what is probably going to be a marathon week and probably months ahead for you and your organization. So I have two questions. The first one is, just so that we're clear, does the budget include a state tax on PPP funds? And if so, what total revenue is expected to be generated from that tax? And the second question is, does this budget assume a new tax on federal supplement to state unemployment benefits? And if so, what is the budgeted total revenue you're anticipating from that new tax?
Okay, so this is where I'm going to introduce Mike Allen and his team. I am going to start by to the first question. The proposal proposes to include the income and allow for deductions, thereby creating net zero to the tax base, which, as we discussed in the testimony, neither, right, no net harm nor benefit. But I think it's a good opportunity to let someone else say it in different words. Again, it's a complex item. So Mike, I can't see you on my screen. I know you, oh, I see you. There you are.
I think I have unmuted Dr. Allen, and is that true, Dr. Allen?
I think so.
Yes, wonderful. And is there someone else on your staff that I should be unmuting? Could you give me the name?
Daniel D'Alessandro
right.
and John Sagerser.
Thank you. Just one moment. I'm going to ask, I just asked Daniel, and I'm about to ask John. Okay. And also want to remind folks that if we don't get all of our information we need today, that we're going to have a work session, and that the analysts for tax and analysts for AFA are very good about tracking questions and making sure we have a good, robust back and forth between the committees and the administration. So just remember that folks are tracking that as well. So Dr. Allen, why don't you go ahead?
Okay, thank you. Senator Pouya, could you just ask your second question first? Because I think that's, I think I know what you're getting at, and I think that's the easier one to explain.
Yeah, does the budget assume a new tax on the federal stimulus for state, or the federal supplement for state unemployment? We've never had a federal supplement for state unemployment. The $600 checks that folks received, is there going to be a tax on those for Maine residents?
So the federal government has always taxed unemployment benefits, and the state conforms to federal AGI, and so therefore unemployment benefits are taxable at the state level as well. The additional $600 that was part of the CARES Act, and the $300 additional benefit that was allowed by I believe it was the president's executive order at the end of the summer, were considered to be additional unemployment benefits and therefore taxable at the federal level and at the state level. Based on the information that we have from the Department of Labor and from our withholding information, the state collected roughly $55 million in withholding from unemployment benefits during the 2020 tax year. And just to put that into perspective, in a normal tax year, the amount of withholding from unemployment benefits is about $3.5 million. So it played a significant role in the revenue that we saw during 2020. So I wouldn't characterize it as a new tax. It's an existing tax that was applied to those enhanced benefits that the feds allowed.
Okay. The other question was regarding the budget having a state tax on PPP funds. I understand the breakdown that Commissioner Figueroa gave. However, the federal statute that was set up allowed for those deductions to be carried. So by not allowing for the deduction, it's to me, it's a quasi tax, but maybe you can help me understand that differently.
Sure. So this one's a little more complicated because this was a unique program, and the size of the program obviously was quite large as well. The revenue forecast, the economic forecast that we received from the CEFC for both the August 1st revenue forecast and the December 1st revenue forecast tried to capture the PPP program. CARES passed at the end of March, so when the CEFC met, they obviously were aware of that, and to the extent they could, they included it in the economic forecast. So our baseline certainly took into account the PPP program, and as of December 1st, the Internal Revenue Code, the Internal Revenue Services had said that yes, Congress has exempted the forgiven PPP loan debt, so it's not taxable, but according to the IRS rules, they were not going to allow the deductions associated with those that forgiven debt. So that was the law we were going under. Also, the state conformed to the Internal Revenue Code as of December 31st, 2019, and the revenue forecast is always based on current law. So the assumption was that those deductions were not going to be allowed. When the CAA passed, Congress did allow those deductions to now be allowed. And to conform to that, we estimate would be roughly $100 million or so. I'll be honest with you, it is a rough estimate, and we're still struggling with to what extent the new round of PPP that was enacted in the CAA is captured in the baseline. The Consensus Economic Forecasting Committee in their November 1st report did assume another stimulus package. I think they were assuming at that time in the first quarter of 2021. And they weren't very specific about whether a PPP program would be a part of that stimulus package. They didn't talk about specific amounts. So it's a little hard. We've struggled with this. I'll be honest with you, and I'll tell you that we have had numerous conversations with colleagues in other states who are struggling with this same issue. But I think we're confident that conformity to PPP would cost the state somewhere around $100 million this time.
Thank you.
Thank you, Senator Pouliot. Next is Senator Chipman.
Thank you. I've got two questions. The first question is the $1,200 and then the subsequent $600 stimulus payments that everyone received taxable? And the second question has to do with income tax with people that are working remotely. We've had a lot of people flooding into Maine and working remotely for companies that are located in other places. Would that be considered income generated in Maine, works being done in Maine, and particularly folks who are working for companies that are located in states that don't have a state income tax? Therefore, they wouldn't be subject to double taxation. If there's no state income tax, say for a company in New Hampshire and the person's working remotely in Maine, why wouldn't we be collecting state income tax from that worker?
Okay, so I'm going to take the first question, and I think either John or Daniel will jump in on the second question. I get the easy one. So the $1,200 stimulus checks, and then the second round of which was $600, as you indicated, those checks are not taxable at the federal level, and therefore they are not taxable at the state level. And we're hoping to get a guidance document out soon that will make that clear to taxpayers.
Excellent, thank you.
So, Dr. Allen, you wanted John to take the next question?
I think John is going to handle the remote worker issues. I'm trying to remember what we agreed on, but okay.
Thank you.
Good morning, Senator
Good morning.
Senator Chipman, members of the committees. I'm John Sagasser, Tax Policy Counsel in the Office of Tax Policy. Senator Chipman, your question has to do with the differing work arrangements that have resulted following the pandemic and the state's various emergency orders and just shift of where people are working. So let me just, I'll put the few pieces out there and try to answer your question, and then this is a topic that obviously can spin out other questions. Maine follows a basic sourcing rule for income that most states follow, and that's the physical place of work is where the work is deemed performed and properly sourced to a state. So states and Maine tax their residents on all income from whatever sources, but non-residents are only subject constitutionally to tax that's effectively connected with the state. And Maine applies that physical sourcing rule. So the situation that might be addressed is you had a Maine resident who was working out of state, COVID-19 hits, and now they're working in Maine telecommuting to out of state. The standard sourcing rules would say that work is taking place in Maine and it's taxable by Maine, both whether they're resident or non-resident. And if another state tried to tax that under some other kind of sourcing principle, Maine would not allow a tax paid to another jurisdiction because the income is sourced here rather than the other state. The change package has, the supplemental budget part I has a provision that would temporarily expand the resident credit for tax paid to another jurisdiction so that Maine residents in that situation wouldn't face that double tax situation. I think the second question you had, if I understand correctly, Senator Chipman, was, well, what about persons who were working in Maine and now are working physically out of state, telecommuting to their main business, where they usually were in Maine, now they're not. And so that's the question of physical sourcing or not. Certain states, and Massachusetts is the notable example there, but there are others, apply a rule that either on a convenience of what's called the convenience of the employer, but will actually say, well, the work is really being performed where you were working pre-pandemic. That's the Massachusetts approach, or where you're principally based, or some of the other approaches. But most states don't follow that. And there are constitutional concerns about that. And so we stay with the physical sourcing rule and the proposal is not to reach out of state.
Could I just follow up quickly? Just to follow up quickly. So just to be clear, so folks that are like relocating here for a few weeks temporarily through the pandemic, but they still live in another state, they would not be taxed on the income tax. But if they moved here and relocated here and they're now working remotely from where they're living in Maine as their residency, they would be paying state income tax, even though the company's located somewhere else?
In part, that the working here results in the income being sourced here normally. So and that's still the general principle. But for a Maine resident, if they're being taxed by another state because another state is saying, well, either under our different kind of approach or during the COVID-19 period, we're going to say you're still effectively working in our state, then the supplemental budget expands the tax paid to another jurisdiction credit and would give a credit, a Maine credit, for that tax paid to the other state. But so there are two scenarios. Well, what about a person who's just moved here and is working here? If they're not a Maine resident, then they're just taxed here. The income is sourced here. If they're a Maine resident, either by domicile or statutory residency, then the proposal in the supplemental budget is to mitigate the possible double tax and provide that tax paid to another jurisdiction.
And I would just say, my understanding is that some of the underlying rationale for some of that is an agreement between all the governors and legislatures that we don't want to penalize people for staying put during the pandemic, that the public health interest was to have people stay out of the workplace and not to travel. And so we don't want to inadvertently ding people for doing the right thing. The next person I will call on is Representative Mo Terry.
Thank you, Madam Chair, and thank you, Commissioner. That was incredibly clear and very, very helpful. I think my question, though, is for Dr. Allen. Commissioner Figueroa had said earlier in the in her testimony that we'll be sort of anticipating that taxpayers, that filers will have questions. We saw the Department of Labor get completely overwhelmed in the beginning of the pandemic with unemployment, and there was a high degree of frustration from citizens trying to log into that. I don't anticipate seeing as much of that with people filing their taxes, but I would imagine it would be a heavier load than what MRS is used to. And I do know that they give amazing customer service. I'm wondering if you have maybe a pile of temps that will be able to help mitigate those calls once they start coming in on February 13th, I would imagine, to help your regular staff with getting filers the help that they need.
Mike, I'll start a little bit and you can add. I have had conversations with Jerome Gerard, the Executive Director of Maine Revenue Services, and currently what he is proposing to do and has prepared for is reached into some of the other divisions that won't normally be on the phones to be prepared to be on the phones. Although this is going to be complicated and probably a higher volume, Maine Revenue Services is well up to the task. And so Jerome indicated that he thought they would be able to cover it. And to your point, we also have access to some temporary contract workers that we sometimes do bring in during tax season and would be ready to ramp that up or back down as we experience call volumes.
Great.
I would just add, Representative Terry, as you know, tomorrow morning, there's a work session in tax on these issues and Jerome will be there. So
Great.
You'll have the opportunity to ask him directly.
Fantastic. Thank you so much.
All right, Representative Sachs.
Thank you so much. And thank you, Commissioner, for the presentation this morning. My question goes, of course, to the very last thing that you had said, which was on municipal revenue sharing, and that I quote that allocations brought in line with projected resources based on the Revenue Forecasting Committee and incorporating changes. Can you talk a little bit about that? My concern, of course, stems from the fact this is maybe one of the more flexible funding sources. And so when budgets need to be balanced in the past, that this area has been one where there's less allocations and our state and local governments, of course, rely on it. So could you speak to that just a little bit, please? Thank you.
So what we've done here is adjust the allocation for the actual dollar amount that's forecasted in the 2020. It's not an up or a down of an appropriation just based on the amount of funds that will go. Mike, maybe you can talk about, right? I mean, as revenue forecast changes its expectations, those allocations will change, but I just want to state that you might be getting to, did you change the percentage? The percentage that's still going to revenue sharing as part of revenue sharing continues to be 3.75% in FY21.
No, that's absolutely correct. And I mean, there was a great deal of concern early on back in March that, we were going to see a very significant revenue impact. And that was certainly going to affect municipalities as well. Fortunately, the decline just hasn't been what we had originally anticipated. And while the municipalities are going to be affected to some extent compared to where we were in March, certainly the extra revenue sharing rate, the rate increase from 3 to 3.75% is helping to offset that decline in the revenue sharing lines.
So just to be clear, the changes that Commissioner Figueroa has mentioned mean that more money is going to be going to municipalities because you've changed it from the August revenue forecast to the December revenue forecast. Is that correct?
I think this might be even picking up. Yes, I might be going from March to December. Is that correct, Commissioner?
Yes, it's actually picking up the difference between March, which, as you might recall, was forecasting an increase at that time just before the pandemic. And so now we're adjusting to the numbers that, if we had adjusted in August, would have gone down and then would be coming back up. So we're just adjusting back to what the revenue forecasting. This is a standard entry that we'll make in the budget to adjust to what the revenue forecasting would show, would be the numbers going to this line item.
But what was printed in the supplemental budget document, those numbers are March or August?
Well, what was printed in the document were incorrect. The numbers, the numbers should be
what you said.
Should be what I said in the testimony, and should reflect the difference. Yeah.
Okay. Thank you.
And we could actually probably get a sheet of paper that shows that a little differently. Yeah.
Representative Sachs, does that answer your question? If you're saying yes, I can't hear you. I'm going to assume that is a yes. All right, so the next few hands I see up are appropriations members, and the first one, I also wanted to make a little lunch announcement. We are not going to break for lunch, but of course, all of you, all of us are welcome at any time to put your picture, hide your video and get something to eat. I encourage everybody to do that at their own convenience. So I'm going to go first to Representative Cloutier.
Thank you, Madam Chair. So I have a couple of questions. A few of them are related to language throughout the supplemental budget, and then one of them is related directly to the PPP loans. And so I guess I'll ask that question first, and then if we want to double back to the language questions maybe later, that would be great. So, it occurs to me that the feds and sort of the timing of the various relief packages are kind of putting states, including Maine, in a bit of a bind in how we conform to those things. And then, and I think that sometimes as we talk about these things as committee members, the language is really dense, and folks who might be listening to the conversation on YouTube may not necessarily understand the conversation as well. So I kind of want to bring this down to like as simple terms as we can. And so my understanding is that when we talk about the PPP loans, the feds are addressing it in two ways. One, they're allowing the income to be considered as non-taxable, and they are allowing a deduction of the expenses. And if that is not correct, I know that Dr. Allen will correct me. And so if that's the case on the federal level, I just want to be clear about what the proposal is on how we're going to treat this at the state level. And then I also want to ask the question about how we came to that decision on which of those things to include. Because I think that we all have businesses, small businesses within our districts who have really struggled through the pandemic. And I think we want to try to benefit as much as we can. And I'm just interested in how we're coming to that decision and whether we're benefiting the most folks within the state that we can.
So I'll start and then kick to Dr. Allen. So you're correct. So the federal government is saying, as in that box 3, you don't have to include the income, but you can count the expenses that you paid for with that income. So it's really opposite, like a standard treatment of income and expenditures, where you receive income and you get taxed on that income, and then you're allowed to take deductions that you paid for with that income and create your tax base. So what Maine has determined to do, for a number of reasons, we would, continue to say that the taxpayer will file their federal taxes the way that the federal government has landed on, which is that double benefit of. So I think if you look at the example in the third box, that basically, as a result of allowing that double benefit, a business can go from having a positive net income to now shifting into a negative income, which will either offset other revenues or result in a refund. And that the states weren't ready for that. So the federal totally appreciate what the federal government was doing, and not sure 4 days before the end of the year that, they completely understood that would mean that states would have to figure out where those refunds or reductions to other income were going to come from. I think some people, I'll let Dr. Allen restate what I just said and make sure I stated it correctly. I think that Maine landed in this place for 2 reasons. One, the financial impact to the state. I think people have wondered, if you had the CRF funds to use, would you have used it for this? So I would like to address that in the sense that, as you might remember, the CRF funds were originally given to the states in March-April timeframe, with a deadline of 12/30 of 2020. And so Maine distributed those funds thinking that deadline was going to be real. Again, 4 days before the end of the year, 3 days before the deadline, they changed the deadline, but by then Maine had committed the funds, and Maine had committed a significant amount, almost half of those funds, to business efforts. Might we have said, we'll hold on to $100 million and pay for this opportunity instead? Possibly. However, I would like to just note that it almost rings of a revenue shortfall. So there are restrictions on CRF being used by states to fill revenue shortfalls. So the feds might have almost told us that even though we did this double benefit, and even though we didn't give you the money to pay for it, you still can't use these CRF funds to do that, because it falls into this revenue. So I know that there were some questions around that about if we hadn't, could we? So I talked to that a little bit, but I think that hopefully explains. Let me let Dr. Allen say again how we landed at this decision and make sure that I appropriately stated it.
So I'm going to ask Daniel D'Alessandro. He'll walk you through, Representative Cloutier, how our thinking had changed from over the summer to recently because of passage of the Consolidated Appropriations Act.
Hello, Representative. My name is Daniel D'Alessandro, and I'm an attorney with the Office of Tax Policy. So this has been a moving target since the CARES Act came out. The CARES Act had the PPP loans and the forgiveness of those loans, which under pre-existing tax law, long-standing tax law, would have been the standard tax treatment in the chart, the first row, where the forgiveness of loans would give rise to income, and the deductions would be allowed. But the CARES Act changed that, reversing those, but still coming out at basically the same result, and that's the second row. So when we presented the proposal initially in July, we had been looking at conforming with the CARES Act, still having little or no tax impact on taxpayers or on revenue for the state. But then when we had the Consolidated Appropriations Act, which excluded the income and allowed the expenses, effectively being a tax expenditure at the federal level, that was roughly $100 million. And looking at ways to avoid that cost while keeping taxpayers from being harmed, we discussed this with numerous tax groups, right, CPAs and other people in the community. And what looked like the most straightforward way was to maintain the current tax treatment. And that's to keep the income, right, the tax forgiveness, the loan forgiveness as income, and to allow the offsetting deductions. And as we have in the fourth row of the table, that should hold taxpayers harmless on those loans and should also hold the state harmless.
And can I just ask one follow-up question?
Sure.
So I know that we can't predict the future, but is there the possibility that the federal government might provide relief to states to be able to then implement the double benefit in a future relief package? And if so, would there be enough time for us to do that?
Well, the federal government is considering another coronavirus relief bill, and there is money in discussions for that bill for states. It's unclear when that would happen, or if there will be money for states, or what the rules around that would be at this point.
Thank you.
I think this is a good point to bring up because the federal government right this moment is potentially going to have another conversation. So stay tuned, I guess. The tax policy group is waiting and we'll review everything as soon as it comes out. But as we're all aware, there's a lot of conversation that actually happens before the paper gets officially approved. And so we'll have to watch for the final action.
I'm going to move now to Senator Bailey and then Representative Arata.
Thank you, Madam Chair. I have two very different questions. The first one I think is for the commissioner. And I think when you were talking to the chair about revenue sharing, she kind of hit upon it. But as a newbie here, can you just answer for me a real basic question, which is the supplemental budget that we have in our notebook, which is I think still LD 42. I don't know if they've given it a new number yet. What the numbers in there, are they based on the August revenue forecast, the December revenue forecast, or something else?
Commissioner Figueroa, did you hear that question?
Yes, I'm sorry. Took me a little bit to find my mute button. Is the supplemental budget based on
August revenue forecast, December revenue forecast, or something else?
So it is based on August. It's adjusted to December. I'm trying to find the one.
Madam Chair, while
yes.
Commissioner Figueroa looks for that quickly, just a reminder, if you're not asking a question, to remember to mute yourself again. There's a little background noise swirling around.
Thank you.
I'm sorry, did you finish your answer?
So on this one page, we
Yes.
try to show the numbers start from the July or August revenue forecast and then include the December adjustment. And then the other two lines at the top of the revenues are just about the tax conformity. So it starts with August, but adjusts for December.
Okay, thank you very much. And then my other question, I think, is probably for Dr. Allen. When you're using the estimate, again, for the PPP loan, I'm going to call it double benefit cost to the state of $100 million. Are you assuming that most users of the PPP loans, if they had the double benefit, would actually be negative income, like the example that was given in our chart? Or are you assuming that they're going to zero out, or do you even have that kind of specificity in terms of what assumptions you're using to come up with that 100 million?
So, yes, this is one of the assumptions we've had to make in coming up with that estimate. We assume that there's a wide variety of tax situations that businesses will be in. If you just take the amount of PPP that came into the state in the first round and applied a tax rate to that, the number would actually be bigger than $100 million. That $100 million does try to take into account the fact that some taxpayers would be in a loss situation. Other taxpayers would be just seeing their taxable income reduced by a little bit. It does try to take into account taxpayers in different situations, and that's one of the reasons why the estimate is a little lower than just doing a quick back of the envelope based on the amount. And that's also one issue, one thing we're struggling with the new PPP program, because it's our understanding it's a little more targeted to businesses that truly were hurt during 2020. And we would expect them to have a lower tax rate applied to that PPP loan than, say, a broader program like the first one.
If I could have a follow-up, Madam Chair. Thank you. So what I'm wondering is, have you looked at the numbers, and would it make any significant difference if, for example, we excluded the negative net income and only allowed the double benefit up to where a business would zero out?
I think any option outside of full conformity would have a different fiscal note. Yes, if that's the question I think that you're asking, correct?
Yes, thank
Yes.
you.
Yeah.
You said it more succinctly. Thank you. Thank you, Madam Chair.
Thank you. Next is Representative Arata and then Representative Fay.
Thank you, Madam Chair. I have a bunch of questions. Hopefully they won't take very long. For Part G, can you clarify that there's no change in the itemized deduction limit so that individuals can claim more of their charitable deductions? This just applies to corporations?
You want to take that, Daniel?
Right, so the CARES Act increased the charitable contribution limit, and that was extended by the Consolidated Appropriations Act. So it'll apply to 2020 and 2021. And we're proposing to conform for both. The decoupling language you see here is just for tax year 2019 filers. That would be fiscal year filers. And we are doing that because we don't want to reopen the old tax years. And like you said, it does just apply to corporations.
Okay, so there's no ability for individuals to increase their charitable contribution deductions above the limit, Maine's limit for itemized deductions, right?
Right. Maine's separate limit on itemized deductions is not being changed.
Okay.
We are conforming to the federal increase.
Okay. Also, with regard to the PPP loans, so any portion of the loan that's not forgiven is not taxable, right?
That's correct.
Because it's a loan, loans are not taxable anyway.
Right.
Okay. Also, I didn't see anything about, maybe I missed it, is Maine not conforming to the net operating loss carryback that would allow businesses to have a loss to carry back their losses a few years in order to get an immediate infusion of cash?
Right. Maine's not conforming to that federal change. And you don't see it in this bill because Maine previously decoupled from federal NOL carrybacks. So that's an aspect of current Maine law. And it's not being changed by this bill.
Okay. Also, with regard to the qualified improvement property, I'm a little confused because I'm on government. I was on government oversight committee. I was on the tax committee. Now I'm here and I'm hearing all different things and it's confusing me. So bear with me. So the OPEGA report to the government oversight committee said that Maine does not conform to bonus depreciation. And that's why we have this capital improvement credit program. But then the report to the tax committee said that qualified improvement property does qualify for bonus depreciation. And so which is it?
Okay, so let me start at the beginning. The Tax Cuts and Jobs Act of 2017 created bonus depreciation or made it more generous. So that would be immediate expensing. Instead of deducting your expenses over several years, you would take it all in the first year. And that applied to a large variety of property.
Right.
Qualified improvement property, this is retail improvements, was left out in what's generally considered to be a drafting error. And it was classified as 39-year property. And so did not qualify for bonus depreciation, and as such did not qualify for Maine's Maine Capital Investment Credit, which is our replacement for bonus depreciation for property placed in service in Maine. What's happened here is the federal drafting error has been corrected. So the qualified improvement property is now 15-year property, does qualify for bonus depreciation at the federal level. Because Maine doesn't conform to bonus depreciation, but because this is now qualified improvement property is now bonus eligible, it will also be eligible for the Maine Capital Investment Credit if we conform. The specific change we have here is just excluding the retroactive inclusion. So the federal change was retroactive going back to 2018. The 2018 and 2019 property, while we are conforming to the new depreciation schedules, still won't qualify for MCIC. But on a going forward basis, 2020 and on, it will qualify.
So
and again,
it will qualify for MCIC, but not for bonus depreciation.
Right.
In other words, they can't double dip.
It will be bonus depreciation at the federal level, and then MCIC at the state level.
Okay. I think I got it. All right. Thank you very much.
Thank you, Representative Arata. Next, we have Representative Fay and then Representative Hymanson.
Thank you, Madam Chair. And I hope this is going to be a little bit of a simpler question. As a matter of fact, I'm sure it is. And it's, I think, more of a request for information or a request for the work session. So I would like to better understand the waste facility tax reimbursement program. And I did kind of dig in a little bit into the statute, and I still found myself somewhat confused. So if someone could help me understand what waste facilities it applies to, and how that tax credit operates. And I know it's a small number in the curtailment, but it's just something that I'm really curious about.
So we can get that for work session, Representative Fay? Great.
We can do that.
Thank you. Representative Hymanson.
Thank you. This is a question about for Commissioner Figueroa from the introduction and about the curtailment. And there was a de-appropriation of 125.1 million. And part of that was delaying tech upgrades. So this isn't particular to tax, but I know that the IT world goes through every department. And so I'm curious, I'd like to know more about the delay in the tech upgrades, because our technology through IT supports security, ease of use for Mainers, better data collection and interoperability. And I wouldn't want that to be curtailed in any way that would be meaningful for any of those places. So if you could keep that on your radar screen for when different departments come over, so they can talk about the IT tech upgrades that were delayed, I'd appreciate that.
We will do that. And I agree wholeheartedly that that is not a place that the state can afford to make reductions. As a matter of fact, you'll be hearing in the biennial budget where we argue that, or where I compassionately discuss the fact that we need to have another infusion of funds for that. I will tell you that what we mean by this were either literally just delaying so that we could just shift the expense from FY21 and do the thing in FY22, or there was a, I can remember that there was an instance where we thought we were gonna end up being able to patch something sooner, and that wasn't the case. So we didn't have to expend those funds then, but we'll still do the patch when it's available. So a lot of what we're talking about here was temporary reductions in the moment, but not, they won't permanently affect what we will plan to do with that technology. And then there are some opportunities where we might have decided that we were gonna move forward as a state with something. And we just put that on hold again temporarily, but we can bring that up and have the agencies talk about those things as they do their testimony.
Thank you.
Yep, thank you.
It looks like Representative Cloutier has another question. I just want to make sure there's nobody else who hasn't asked anything first. It looks like John Martin is waving his hand. So I'm going to defer Representative Cloutier, if you wouldn't mind. Representative Martin. You need to turn off your mute button.
Yeah.
There you go.
Both deal with A83. First is, what is the, I may have missed it, but what is the amount for municipal revenue sharing that should be 10 million something?
I have it written in my book right in front of me. Would you like me to repeat it?
Yeah.
It was 10,891,763.
Yep.
Okay, great, thanks. And the second one deals also with revenue sharing. What would be the cost if we were to go from the 3.75 to 4% for this biennium, for this year?
For FY21?
Yeah, for the work session, maybe Commissioner, you get that for us.
Yes, I can do that.
Thank you.
Representative Cloutier.
Thank you, Madam Chair. So I just wanted to dial back to sort of my general supplemental budget questions. So I think that these will all be for the commissioner. So one, throughout the budget, there are 2 phrases that are being used, and I just want to make sure I have a correct understanding of each of them. So one of them is to align with projected actual expenses, which to me implies adjusting the budget to meet the actual need. So are we, like through consistent process and evaluation of departmental budgets, are we revising those estimated expenses based upon what we have spent or are spending? In other words, being sort of fluid about identifying savings opportunities. And then the other phrase is managing materials and supplies expenses, which to me implies deliberately using less of something to stay within budget. So I just want to make sure I have the correct understanding of those 2 things. And then also throughout the supplemental, when we talk about shifting costs to allowable federal funding sources, are those costs going to need to be shifted back to the general fund in future budgets, like in the biennial when we're, hopefully through the pandemic?
Those are all great questions, and actually basically highlight what we spent the last 3 months doing as we prepared for a budget that originally was meant to be, a 10.4% reduction, and then fortunately was able to come up to something different. But that you have all of those correct in that aligning with projected actual expenses. For instance, some of the ones that we did today are based on information that we have a general fund budget, and based on what we're seeing in the program and what we're actually seeing for those tax expenditures, the amount will be different. And so for this moment in time, we could de-appropriate a certain amount of money. In some situations, it looked like that was going to be ongoing, and in other situations, it looked temporary. So the answer to will it continue or will it not really was, it depends on every situation. So there will be some curtailment items that people will say, we feel like we're able to continue this into the biennium. And there were other curtailment items that were going to be one time. And that is the case for some of the management that we did of other expense items. For instance, quite easy for us to say in 2021 that we were not going to travel a lot or go to conferences or do some of those things. I have to say, paper is actually a thing because of remote work, that our purchasing of paper is different. So all things that we will evaluate and felt like we could do now, and some will forever change. I mean, I think Zoom is here now, we're used to it, so that will forever be a change, but probably not to the degree, for instance, that we are now. And then I would loop that into the changing of funding sources. We use some federal monies to do some departmental initiatives or fund some personnel. And we do that, again, some are able to say, I think we can continue to do this. And some is, I think we can shift it for now, but would want to shift it back. And as we go through the budget, we talk in terms of one time would be an indicator. If you see the phrase one time, then that would be an indicator that in 22 and 23, it revert back to original. But we do also try to highlight when we talk about it. And I should say federal funds, other special revenue funds, we have a couple of other funding sources that we looked at to see, is there an opportunity here?
Great, thank you very much.
Thank you.
I see Representative Millett waving his hand. Representative Millett.
Thank you, Madam Chair. I have a question of timing, which I would wonder if the two committee chairs and or the presiding officers might want to weigh in on. I'm thinking about the language portions of the supplemental budget bill and the timing of the February 12th filing start, is there any consideration, does it make any sense to think about pulling out those conformity or non-conformity issues out of the supplemental and taking them as a separate package and addressing them sooner rather than later for purposes of helping the taxpayer filing community? And related to that, and I stand corrected if I'm misinformed here, the $100 million issue, which is obviously going to be problematic for a lot of us, seems to be a revenue gain in the biennium versus the current fiscal year. And given the conversation about the pending Biden $1.9 trillion and changes that might be forthcoming there, is it possible that we might separate that issue from the immediate attention of the two committees and deal only with the language questions that relate to filing for calendar year 20 and the issues that affect the immediate taxpayer filing season? Just interested in a reaction if there has been any thought given to that. Thank you.
I think you bring up a great point, Representative Millett, and it's something that we certainly can consider, with the caveat, of course, that there still might be more changes between now and February 12th from the feds. So I don't think there's a date certain by which we can stop the parts from moving if the parts from Washington are still in motion. But I think we can try to be strategic about that for sure. And I appreciate the suggestion. Is there anything, Commissioner, you'd like to say about that?
I'm not sure I understood the second part about the $100 million being more impactful in the biennium.
Maybe I could ask the question. I'm looking at the Chris Nolan summary of the status sheet, and I see the $104 million that's increased revenue in 22 and 23. And I need to know better than I do at the moment when that $100 million issue would be imposed upon Maine taxpayers. Is it intended to be an income stream that we want to hold on to for fiscal 21, or is it a biennial impact?
So I'm sorry that I'm not sure that the 104 that you're looking at, I'm quite sure is not the PPP number that we're talking about. But I think that Dr. Allen is actually trying to find. But so maybe we could just talk about it, but it feels like we're talking about two different things. So I want to.
Well, we could also make sure we get it clarified for the work session.
Okay. Okay, I will do that.
Looks like Maureen is trying to chime in.
Yes, I think that the 100 million that you were talking about, Representative Millett, relates to proposals that are just in the biennial budget. It looks like Chris has pulled out the supplemental and the biennial, and you see in the supplemental, there's revenue impact going into fiscal year 22 and 23 from what is proposed in the supplemental. And there's also about $50 million a year from things that are proposed in the biennial. So I'm not sure whether that's a source of confusion or not.
Okay, well, I will look at that sheet and figure out that answer.
Thank you.
Yep.
And just for the public, that's the general fund status sheet that is in the OFPR website, but not part of today's material. It's a standing piece of information in OFPR. Representative Peirce.
Thank you, Madam Chair. I just want to, when you give us that answer in the work session, just the clarification of, we're definitely not talking about the PPP. We're talking about something else. Correct? Okay.
I feel convinced about it. I just, it's one of those unfortunate same number, different topics.
Okay, so I don't see any other committee members with their hands up, either electronically or literally in their squares. So I think this would be the time where we invite our attendees, the folks who have signed up to give testimony. And I say this with all due respect, that I hope I do this right. And that I invite you in, and that I don't somehow mess up and cut you off. So the people I have in the queue for public testimony in order of where I have them are David Clough, Fred Brewer, Gregory Dougal, Linda Caprera, Patricia Brigham, and Sarah Austin. So I am going to start at the top of the list that's on my screen with David Clough. And I think what I do now is push the allow to talk. And I believe you're certainly not muted, so we'll be able to hear you. And I'm trying to find you to see if, oh yes, I see you also. If you want to show us your picture, that would be great.
Let me see if I can find it. Having some trouble, I apologize, getting the camera to turn on.
No
having
problem.
A little bit of connection trouble.
Sure. If you want to just proceed verbally, that would be great.
Yes. Good afternoon, Senator Bream, Representative Person, Senator Chipman, and Representative Terry. My name is David Clough. No offense. Clough is the most common pronunciation. Clough is less common.
Thank you.
David Clough. I have a statement that I prepared with some exhibits. I'm having trouble getting that up to you. So, and I'm not going to read the statement in the interest of time, but what it's focused on the Paycheck Protection Program. And let me just back up. I'm the state director for NFIB, the National Federation of Independent Business, a national small business group that has in Maine a membership of nearly 3,000, stretching from Kittery to Fort Kent and Calais to Bethel and all points in between. As you know from the news, what you hear, what you see, and what you read, as well as your contacts locally, we've been through an extraordinary period of time with a lot of stress, unbelievable stress on the small business community. That stress is still going on. And we would like to see, as much as Maine Revenue Services staffs and the Mills administration, the governor's administration have done to try to help small business. And they have done a number of things that cannot be understated. NFIB members would prefer to see full tax conformity so that the cash can stay in their checking accounts rather than go to the state checking account to survive the upcoming months of the pandemic. We don't know when this is going to be over. We don't know what it's going to be like in the interim. And I like it in my statement, it's a little like been through a traumatic experience or major surgery. Even after you get through the crisis of the surgery, there's still a period of recovery when you're not guaranteed of an outcome. And every bit of help is important to make sure that you get back on your feet. NFIB did a survey, it's been doing surveys nationally of its membership. There are not numbers for Maine, but it found that nearly 1 out of 4 small business people, as of just 4 or 5 weeks ago, were concerned that they would not be able to survive financially longer than another few months. And we have already lost uncalculated number here in Maine and across the country. So cash is very important. Those of you who are in business know that cash is very important. We would like to work with you both committees and the administration to see what can be done to improve upon what is being proposed this morning. I've seen the details, but have not had a chance to really go through them. saw them this morning, had a description recently, but would like to work with you to see what we can do to make things as good as possible for the small business owners around the state. And with that, I'll conclude my remarks, and I appreciate very much your attention. Thank you.
Thank you, Mr. Clow. I appreciate your assist on the pronunciation of your name as well as your comments. And I want to make sure that you are able to submit your testimony, and make sure you send it to afa@legislature.maine.gov, and that will get to our committee clerk. I'm going to ask you to mute Mr. Clow so we can move on to the next person who's going to offer testimony. Thank you. Next will be Fred Brewer. And Mr. Brewer, also, if you're able to join us on camera, that would be great.
Just showing audio. So can you hear me, Senator Breen?
Yes, we can. Thank you.
Okay, so thank you, Senator Breen, Representative First, Senator Chipman, and Representative Terry for the opportunity to speak before the Appropriations and Taxation Committee. I'm a CPA in public practice, and my family's
Hang on, Mr. Brewer. I think I may have inadvertently cut you off. 1 second.
You might need to
Okay.
be readmitted.
Mr. Brewer, are you still there?
I am.
Okay, I think you can you try turning on your camera now?
Settings.
Any luck? We're not seeing you yet. All right, if you want to just proceed verbally, that would be
I'll
great.
just proceed. So,
Okay, thank you.
So my family's firm is in Bath, and we have a diverse mix of clients. So we have a lot of businesses. We also have some municipalities that we work with. So I kind of see both sides of the conversation on the impact to the state and also the impact to the businesses. So our client base, we had about 40% of our clients that received PPP funds. So the business segments that received funds were retail, which was both brick and mortar and online. We had contractors, general contractors, plumbers, electricians, and landscapers. Manufacturers, we had service industries that received it, whether it was software developers, psychologists, eye doctors, dentists, chiropractors, attorneys, and also hospitality. And in March, when everybody was applying for this loan, they were concerned that they wouldn't know how long the shutdown would last, what the impact would be to them and their customers, and when they would get paid for work they were performing. So even if they were operating, they didn't know when exactly they'd be paid. We had one manufacturer that normally is 60-day pay terms, and they ticked up to 90 and almost 120. So the PPP loans were able to help them with their cash flow, even if they were still operating. I have talked to a few clients, and the response has been all over the place. Some have been very upset that we're discussing taxing these funds. Some frustration because they would really like to have these funds available to get them through until next summer when they open back up. And I've had some that have understood the stance and said, you know what, it's it's what needs to be done to keep things going at the state level. So part of the reason why I wanted to testify is the impact of this decision is going to be, it would be nice if we could tailor it to each of the industries that have been impacted, but realistically, I don't think that's going to happen because it just gets too confusing. But the biggest reason why I was hoping that I could testify was that I'd like to impress upon you the importance of making this decision quickly. Because even if you make the decision today, for us to start processing tax returns, you're at least 2 to 3 weeks out before the tax prep software can update for whatever changes you have in place. So it's important. In prior years, when we've been preparing taxes, we've had people who have wanted to get their taxes done in February, and we can't get it done until March at the earliest. So if we wait a long time to make the decision, it's going to compress things even more than they're already compressed with, we're dealing with more time on dealing with the PPP loans. People have more questions about the federal level taxation. And so, it kind of emphasizes what Representative Millett was saying. We need to get the ball rolling so that everybody can plan accordingly. So,
understood.
I'd like to thank you for your time. I'll open up to any questions.
Thank you, Mr. Brewer. I think we're gonna move on to our next person who's gonna offer public testimony, which will be Mr. Dougal. And I'm going to see if we can get him on camera or not. Let me make sure I found him. Looks like I have Linda Caprera in here too. Interesting. Hello, Linda.
Hello.
I'm looking for Mr. Dougal.
Can you hear me, Senator?
I can, and I can see you.
Yes, yeah. I don't know. I got bounced out of Zoom and somehow it reloaded and here I am. So
Well, you were moved from being an attendee into being a panelist.
Got it.
For the moment, and then I'll switch you back over to attendee.
Yes, well, thank you very much. I really appreciate you taking the time. It's obviously a very important issue to a lot of different people, especially to you folks and to all of us who live here and work here. But Senator Breen, Representative Peirce, Senator Chipman, Representative Terry, and distinguished members of both committees. My name is Greg Dougal, and I'm here today representing Hospitality Maine and our over 1,000 restaurant and lodging members to offer perspective on the importance of tax conformity when it comes to the Paycheck Protection Program. Loan forgiveness. So the industry has suffered a measurable loss throughout the pandemic, as I know you are keenly aware. Every one of you has a restaurant or lodging property in your district, and I'm sure you've heard from them about their losses, and certainly what I've heard today, a lot of people have. Numbers that can be measured in relation to this are those that are released monthly by Maine Revenue Services and the Maine State Economist that peg the losses to the restaurant industry at about 27% through November, and lodging properties down 37% for that same period. As a point of perspective, most restaurants operate on thin margins or a bottom line of 3 to 5%. This does not reconcile well with a 27% loss. Lodging sales were down 7% in 2009. It was the first year in my working hospitality life that there were negative numbers for Maine's tourism industry. And that 7% loss forced many hospitality businesses to fail or seek Chapter 11 bankruptcy protection. If not for PPP and the Maine Economic Recovery Grants, half of our industry would no longer exist in 2021. The losses from 2020 are over 5 times greater than that fateful year of 2009 and the Great Recession. In this devastating economic time, the one thing we all know for sure is that small businesses should not be receiving unexpected income tax bills of $1,000 or more based on a rescue loan forgiven by the federal government. This would come at a time in the second quarter when they have no cash reserves and little to no income since the weather started turning colder in October and outdoor dining disappeared. It will also be a time when they will need to be able to have money on hand to purchase supplies for reopening or ramping up for the upcoming busier summer and fall seasons, and perhaps the end of the pandemic. Make no mistake that this is a one-time fix. Remember that the main economic recovery grants, and I've not heard this today, I'm glad that I included it, are also taxable. So the source for a potential final nail in the coffin is not subject to only this one issue. For many, the MERG grant brought $26,000 at the end of the year. Though we are eternally grateful for all the funds provided to us, for a medium-sized restaurant, that may be the gross for a week, not enough to make it to May or June. Revenue streams have diminished and many fixed costs remain the same, and in some cases have increased. So it seems to be a sizable sum of money is spent rather quickly just paying fixed costs, including maybe income taxes. Please know that we are very appreciative, again, of both federal and state funds that have been directed to the hospitality industry, but incurring an additional cost of any type at this time could be the final straw for some businesses. And again, you know, I had no idea what was going to be presented today as far as the change package goes. I mean, there were some rumblings that I had heard about what Dr. Allen would present. I think that I've heard on this Zoom several good ideas that may bridge the gap in some way or shape or form, and try as best as we can. I know we can't keep anybody whole, but you know, to try to minimize the effect on the state and to also try to minimize the effect on smaller businesses. I know Senator Bailey had some good ideas, Representative Cloutier did. And so, as David Clow said, we are all ears and we're willing to assist in any way that we can, because this could be the most serious issue of a bunch of serious issues that we've faced since last March. So thank you very much for your time and happy to answer any questions.
Thank you, Mr. Dougal. Appreciate your comments and your input. Thank you. I think we're gonna move on to Linda Caprera.
Can you hear me?
Yes, we can.
I can't see. Okay, I'm not on. Anyways, good afternoon, Senators Breen and Chipman and Representatives Terry and Peirce, and members of both the Appropriations Committees and Taxation Committees. My name is Linda Caprera. I represent the Maine State Chamber of Commerce, and I am a resident of Winthrop. We are testifying in opposition to LD 42 today because it does not conform to the federal government relating to the treatment of the PPP loans, the net operating losses, the business interest deductions, and the elimination of the FEDE provision. As you know, 2020 has been a very trying year for everyone in Maine with the COVID-19 pandemic, and continues to be, as this pandemic is far from over. We feel very strongly that anything the state can do to keep and ensure the state's economic vitality is extremely important, given that many businesses across the state have been severely impacted by this and continue to do so. On a bipartisan basis, Congress enacted the PPP program to help small and mid-sized businesses remain viable through this pandemic. It was Congress's specific intention that the value of these proceeds not be diluted by taxing them if the proceeds are used for specific economy benefiting purposes. We believe that the state of Maine should conform to this treatment and not reduce the value of these desperately needed and successful program. This PPP loans have been a lifeline to many businesses who would otherwise have had to close their doors for good or lay off workers who support their families. Congress has recognized the desperate situation that businesses across the country were in and reaffirmed this decision in the latest Appropriations Act, as you heard Commissioner Figueroa said. The whole deal behind this legislation was for Congress to get more money in the hands of businesses to help keep the economy afloat. And as such, we feel Maine should follow suit. We also oppose the elimination of the FEDE provision, or the foreign derived intangible income provision. We feel it's simply bad tax policy. This provision was placed into law back in 2017 under the Tax Cuts and Jobs Act legislation to make it easier for US manufacturers to compete internationally. This provision benefits one of the most important components of Maine's economy, those companies that invest and hire in Maine and export overseas. What this would do, the elimination of FEED is going to impact small and medium-sized manufacturers. And from our understanding, it roughly is going to cost them about $10 million, unless that is the figure that we had last year, because there was a bill in taxation that would do just this. So we're very concerned about that. Again, we urge the committee to conform and vote no on LD 42 the way it's currently drafted. And again, we'd be happy to answer any questions, and we will be available for work session.
Thank you very much, Ms. Caprera. We appreciate it. I'm going to try to get this right and see if I can bring our next person, Patricia Brigham. I'm going to try to switch her over to a panelist. That's the first step. And then I'm going to find her and ask her electronically to unmute. I see her, and there's unmute. And I'm going to ask you also electronically to start your video and see if that works.
All right, let's see if I can do this. Okay, yes. I'm here.
Thank you.
Good afternoon, Chairwoman Breen, Chairwoman Purse, Chairman Shipman, Chairman Terry, and members of the Appropriations and Financial Affairs and Taxation Committees, and thank you for your time. Thank you for your time and your service to the people of Maine. My name is Patricia Brigham, or Trish, and I am the Executive Director of the Maine Society of Certified Public Accountants. Quick name, or MECPA, which I will be referring to as I continue through my comments. I'm here today to share the MECPA's thoughts on certain provisions in the fiscal year 2021 supplemental budget that would put Maine out of conformity with federal tax law. The Maine Society of CPAs serves nearly 1,000 CPAs throughout the state who are working in business, education, government, and public accounting. And as the state's premier accounting trade association, our members have a unique perspective on how tax laws impact Maine's individuals and businesses, particularly the small businesses. Over the past year, as COVID-19 and its attendant negative financial impacts have unfolded, the MECPA has welcomed and been pleased to offer our unique perspective in direct conversations with the governor's administration and Maine Revenue Service, and we appreciate all of the time they've invested on these issues. We understand from those conversations that the fiscal challenges facing the state are absolutely real. We also understand that conformity would be another cost for which the state would be responsible. However, as the de facto tax advisor for so many of the state's small businesses, we urge you to consider conformity. As a general matter, conformity provides predictability for businesses and accountants, and it significantly streamlines the tax return process, allowing businesses to focus on their business and not necessarily their tax returns. In choosing not to conform, Maine would be putting more financial and administrative burden on businesses, which will be rather difficult for them to bear, particularly at this time. The current supplemental budget, as we've heard, would put Maine in non-conformity with the following federal tax laws, those which we have the most concern about: the excess business loss, which was Part D, business interest deductions above the 30% of taxable income, which was Part E, eligibility of qualified improvement property for the Maine Capital Investment Credit, which is Maine's version of the bonus depreciation, as we heard, and that's Part F. Each of these provisions was enacted in the CARES Act to help businesses bolster their business cash flow, of critical importance, as we've heard in earlier comments.
during these really challenging economic times. The effect of these provisions was to provide a break for businesses. If Maine chooses not to conform, it may cost businesses money on their tax returns. And in some cases, these costs may come as a shock to Maine businesses, something they did not plan for. As mentioned earlier, when Maine does not conform to federal tax law, tax filings become more complicated. As tax season approaches, businesses may not have budgeted for these additional costs that a more arduous tax filing process will bring. And it also means a potential likelihood of delayed or inaccurate filings. Finally, while the supplemental budget does not address Maine's conformity with PP loan forgiveness, the recently issued change package came through this morning, and we're going to reserve comment on that because we really haven't had a chance to go through it. For the same reasons that we support conformity on these other provisions, we strongly support conformity with the federal tax treatment of PPP loans and hope to provide some additional comment, as I said, as we've had a chance to go through it. As accountants, we have a unique opportunity to see how the policies which you discuss and seem potentially intangible have a true tangible impact on the businesses in Maine. Tax conformity is one such area that may cause undue hardship. They may struggle to understand as well why they owe money to Maine for an action that's taken by the federal government aimed at assisting them through this unprecedented time. COVID-19 has made everything harder for everyone. We are asking you to consider not taking actions that will make it even harder on so many small businesses. I'm really excited to hear some of the conversations among the committee members and some of the creative questions and thought processes. We hope to continue a dialogue with all of you regarding Maine tax conformity and serve as a resource. I welcome any questions at this point, and thank you so much for your time.
Thank you, Ms. Brigham. Representative Arata has a question for you.
Thank you, Madam Chair. Just a quick question. Are grants to businesses typically considered income, taxable income?
That I do not know the answer to that question. I will absolutely get that for you. I will refer to a tax professional. I do not believe that they are, but I cannot answer that for sure.
Okay, thank you very much. That's all.
Thank you. And we can also have our analysts track that down as well. All right, so I'm just going to go back to the other list of folks. We have one person left, Sarah Austin. First, I'm going to move Ms. Brigham back to her role as attendee. And then I'm going to switch Ms. Austin into the panelist mode and find her on my screen. There she is, and ask her to start her video and ask her to unmute.
I'm here.
Oh, there you are. Wonderful.
Hello.
Thank you.
Well, I aspirationally on my testimony typed good morning, but I will say good afternoon to you, Senator Breen, Senator Chipman, Representative Pearce and Terry, and members of the Appropriations and Taxations Committees. My name is Sarah Austin, and I'm a tax and budget policy analyst at the Maine Center for Economic Policy, and really thank you for the opportunity to offer my organization's input on the tax conformity provisions of the supplemental budget. I have been doing some adjusting this morning, so hopefully all of this is still making sense and tracking with the change package as well. So conformity basically asks Maine if it wants to align with provisions in federal law, including many of the massive tax breaks created by the federal government in response to the COVID recession. Some of these programs make sense at the federal level, but most of them are ill-suited for state policy. The federal government can finance these tax breaks with deficit spending, which is a maneuver that is completely unavailable to state governments, which must balance their budgets. Maine is better served focusing resources right now on services all Mainers need to pull through this pandemic recession. That's safe schools, access to healthcare, childcare, good infrastructure, and protecting jobs. As the committee considers tax conformity, I just want to comment on a few specific pieces. First and foremost, the Paycheck Protection Program has had a lot of discussion this morning, and I'll say MESEP supports Part V of the change package and what the administration has proposed here. The treatment in the change package is tax neutral. It is not a tax increase on businesses. It is tax neutral and is preventing a double benefit through tax conformity to what the federal government has proposed late in December. By contrast, it's important to remember that unemployment benefits for workers that they have relied on all year to get them through are not tax neutral in the same way that the PPP loans will be even out of conformity. So adding an additional tax benefit for PPP loans, which were very broadly cast and not targeted super well to the businesses that most needed them, is really not the best way to be spending state resources right now, and not a across the board benefit that's being offered on all of the federal provisions that have helped keep the economy afloat, like unemployment insurance. So reporting from the Portland Press Herald from a few weeks ago had Maine Revenue Services estimate at the cost of this at about $120 million in tax revenues. And that amount of revenue loss would more than wipe out the additional investments contained in the supplemental and biennial budgets for public health, broadband infrastructure, rate increases for healthcare workers, mental health, opioid response, and schools at a time of unprecedented need. So this is a massive scale in terms of how much it would cost to go through with this conformity. And it's also important to note, and I haven't heard mentioned this morning, is that this provision would certainly come at a cost to Maine resources, but will not exclusively be benefiting Maine businesses. Any business with nexus in Maine, which is often determined only by sales into the state and not by investment in the state or employment, would be able to benefit from this deduction. So that's all I'll say on that. I do want to notice that conformity, updating our date, is going to create an important protection for earned income tax credit recipients to make sure that a job loss this year is not going to also hurt their ability to get an earned income tax credit to boost their income. Unemployment insurance is not counted as income for the purposes of the earned income tax credit. So a lot of low-wage workers, which were hit most hard by job losses this year or last year, many of them would see a big cut to their earned income tax credit. And the federal government made a change to the law to make sure that they're able to use their 2019 income to calculate their earned income tax credit this year. But it does look like just updating the conformity date and Maine's law will make sure that all of that is okay and square to go and no policy changes recommended there. I also want to say that Maine Center for Economic Policy recommends against conformity on the excess loss allowance. We're supporting Part D of the supplemental budget that keeps us out of conformity with that. These allowances for excess losses only benefit the wealthiest households, specifically those with more than $250,000 in income per adult filer. The CARES Act suspended a cap on business loss deductions for business owners who file their business taxes through the personal income tax. These owners are typically limited in the amount of business losses they're able to apply to non-business income, such as a spouse's salary or a separate rental business, by $250,000. Up to $250,000 in losses is allowed for single filers, and up to $500,000 in losses are allowed for married filers for non-business related expense deductions. And the CARES Act eliminates these limits for 2018, 19, and 20, allowing unlimited loss deductions above that $250,000 to apply to unrelated sources of income. So who does that really impact the most? Real estate and hedge fund investors are the most likely to benefit from these changes because of accounting practices that are really commonly used in these sectors. In many cases, the losses that get counted here are being deducted only on paper occurring when taxpayers concentrate certain expenses in particular tax years rather than spreading them out over the period in which they're generating income. So pumping more tax breaks into these industries that we know benefited from a strong stock market and real estate market in 2020, and a year when job market collapse for low-wage industries is a really bad use of resources at the state level. Conformity to this benefit would shower the majority of its benefits on the wealthiest households. The JCT estimated about 80% of the benefits go to households with income over $1 million. And the average benefit is about $1.6 million. So very heavily tilted towards the wealthiest that have mostly weathered this recession pretty well. Part E of the supplemental, MISEP is supporting Part E, and we recommend against conformity for increased interest deduction. The CARES Act gave businesses permission to write up to 50% of their income instead of 30%, so increasing the amount of interest that is being allowed to be written off in a given tax year for tax years 2019 and for 2020. Conformity to this provision would benefit all businesses paying taxes in Maine, which includes a lot of multi-state and multinational companies that have debt-financed investments outside of Maine. Smaller businesses that struggled this year will not benefit as much from this additional write-off, while large multinational operations within Maine, many of which saw massive profits even during the pandemic recession, would receive windfall tax breaks. And that's because the limit is an additional 20% of profits. And if you did poorly and struggled this year, your profits are a lot smaller. So 20% of that is a much smaller benefit than a business that profited a lot in 2020. So another part of this is that a common accounting practice for multinational companies is actually booking debts to the US so that they can lower their taxable profits in the United States. So this helps to encourage that profit stripping that is a big part of international tax schemes to lower tax liabilities. And finally, MISEP is excited to see that the foreign-derived intangible income deduction is being decoupled in Part U of the change package. The Tax Cuts and Jobs Act created this deduction, I'll call FIDI for brief, to encourage corporations to keep high return intangible properties like brands and patents in the US rather than registering them to offshore tax havens. These assets are central elements in offshore tax haven abuse, and ensuring that US companies register their brands and patents in the United States is a crucial element of closing the tax haven loophole. But this deduction is very poorly designed and has done nothing to sway the decisions about the companies, about how companies account for intangible properties. This is a case of good intent, incredibly bad policy that is very poorly designed to get to the goals that it set out. In fact, it has actually created new opportunities for corporations to game the tax system by rewarding companies for investing more tangible capital, more intangible capitals overseas. Investing more in infrastructure and factories overseas actually helps you get a bigger benefit under this. So it's very paradoxical in terms of what it's actually achieving. One of the research papers describing this is actually called "Oh, the Games They Will Play," just because this is definitely a poorly designed benefit that opens a multitude of loopholes to be used. So while it was passed with the intent of slowing international tax avoidance, the deduction does the opposite. It is a costly tax giveaway that gives more to companies that are locating their capital assets overseas than it does to companies that keep their large production operations here at home. Because this tax break is larger for companies that have assets overseas, the main economic incentive of this deduction is to encourage investment overseas. And early evidence is showing that this is exactly what is happening. So definitely appreciate the move to decouple from that and support that as part of the change package. So I will leave it there. I absolutely will submit written testimony as well.
Thank you, Ms. Austin. Representative Peirce, I saw your hand up earlier. Do you have a question?
Thank you so much, Madam Chair. I just wanted to reiterate not only to Ms. Austin, but to all of the people that gave us testimony. If they haven't sent that over in some written form, it'd be very helpful for that to happen, so that not only the AFA committee would have that, but also the tax committee would have these comments as we all do our work session. So thank you for testifying today in our new world. But I just want to make sure people are sending written testimony in.
Thank you for that reminder. And again, the email for our clerk in general is afa@legislature.maine.gov. And I think tax would be tax@legislature.maine.gov. That will get to our clerks, and then that will get to us. Any questions for Ms. Austin before we finish up? Okay, so Ms. Austin, hang on. I'm going to put you back over virtually into the attendee side of the okay. I don't have any other well, first I should check with our clerk, Mandy Shorey, to make sure. Mandy, is there anybody else waiting that I'm not aware of to offer public testimony?
We do not have any additions.
Thank you so much.
You're welcome.
Maureen, is there anything, any housekeeping or next steps, either from you or from Julie from the tax committee, that we need to be talking about with the two committees?
No housekeeping for the two committees, but I do want to also remind anybody who wants to submit testimony that really the best way is to go through the legislative portal. If you go into the legislature's homepage, at the bottom, there's a button that you can click that says submit testimony. And that is actually in a lot of ways, a more efficient way. We would take it, obviously, email directly to the clerks, but the more efficient way to get that to us and get it posted online would be through the legislative homepage.
And that portal is functional now?
That portal has been functional. I think the one you have in mind is the portal to sign up to testify.
Oh, okay, great.
And that one is still being in progress. But
okay, I had my portals. So
yeah, there's a lot of portals. Some of them may hopefully be to another universe. So we'll see.
Not yet. We do have to pass some budgets first.
Okay, after the budget's passed.
Representative Fay has her hand up.
Yeah, I just wanted to jump in, I think, and my battery died last week as I was making a suggestion for the people out there. For some of us who can't necessarily print things out in real time, if any written testimony is able to be submitted through that portal, it actually comes into our legislative email inboxes. And if I have it, I can print it out ahead of time, which means that it's easier for me to take notes and to kind of really peruse that ahead of time so that I can be a little bit more thoughtful about how I approach that particular testimony. And that's just my process, but it seems to me that for anyone testifying, if you can get that to us ahead of time, we can print it out and it might be more efficient for us and for you.
Thank you very much. Representative Millett, was there something you wanted to chime in on?
Not really, but I just wanted to agree with the comment just made. Am I muted or not muted?
We can hear you. Go ahead.
I am sitting here at my kitchen table with my little laptop, absent any of the 14 pages and the multitude of charts and the testimony and all of that, wondering why I'm sitting here listening without having a clue about what's being shown and said. So I'm going to make a point of having in my hot little hands every bit of printout that I can get in the future so that I'm at least in tune with what's being said. That's my way of saying I am totally out of sync here today because I have nothing in front of me. And I am going to correct that in the future.
Well, I'm shocked that my extremely sophisticated tech advice did not land with you. But I have found personally that if you can have Zoom, shrink your Zoom screen a little bit, and then bring up some of the things that are in your inbox or on the website, then you can go back and forth. But that might be something where somebody in the State House, either IT or someone in your caucus, might be able to give you some technical assistance with that as we all try to get a little bit more fluent. It looks like Representative Corey and Representative.
Oh, you muted yourself.
Representative Corey.
Yes, can you hear me? Yeah. So to Solomon's point, I think the complicated thing for me was, so I had the PDF of the commissioner's testimony going, and then there was another PDF of the document that showed the illustration on it of how conformity works, with, the other two adjustments that were made, by the federal government. It's hard to follow this stuff, through, computers. I have, really sweet Apple laptop, do you know what I mean? With all the memory and speed and everything else in the world. But, shifting between screens, and, I've been on computers for 20 years since the beginning of my career. It is fairly easy for me. And I'm even having a problem, keeping, up with this, wondering if, we need multiple monitors or what we need to be doing, here, and then printing things on the fly. It's just, it's complicated for sure. It's difficult to follow. Sorry to complain.
It's okay. We're all being challenged in new ways here in COVID times. Representative Sachs.
Thank you so much. Quick question. Just wondered where the YouTube video of this will be. Is it on AFA? Afterwards, most of Freeport is without power, over 3,000 of us. I apologize, Commissioner, just as you were answering my question on municipal revenue sharing. So if we want to go back and watch portions of this, is it on I know it's being streamed over YouTube. Is this on the AFA page?
It looks like Maureen is here to answer your question.
Yes, the agenda that we sent out, the detailed agenda, has a link to the YouTube, and I will resend it to all the committee members. But for the public, we always include that with the agendas we send out to the interested parties, and I believe the agenda that's posted in the paper as well. So I'll resend that to you, the committee members, so you can forward it to your constituents. But hopefully, and the legislative website, the main page, I think has an easy way now to navigate to the YouTube page, and it would be within the legislative YouTube under AFA. So
under AFA. Thank you so much.
Thank you, Maureen. Representative Peirce.
Thank you, Madam Chair. Also, I'll just tag on to what Maureen said. You can subscribe to these YouTube channels for whatever committee. We all have our own YouTubes, so that you would constantly be getting refreshed on that. And I just want to compliment my fellow good chair, who did a great job moving people in and out on this public hearing. And I appreciate everyone who, it was pretty good, I have to say, for our first round through. But I appreciate the patience that everyone has. I think we're all going to have to develop some systems at home or where we are to figure out how to make this all work individually, since we're just not able to be around the horseshoe for obvious reasons. But I think that there are a lot of great people around both of these horseshoes that might have some great suggestions. And I encourage people to share, maybe not in our committee, but at a different moment, about what works for you and what doesn't work for you as we try to make our way through this, because it is hard to jump around and follow along. And I'll be doing a lot of printing this afternoon and getting myself organized for what we heard personally. Thanks.
Yeah, thank you. I appreciate that, Representative Peirce. And I do think that, you know, we need to stay in communication with our leaders who are in communication with the Executive Director's Office and Legislative Information Office and all those nonpartisan staff who are really the people who keep our work going. And they have all really risen to the occasion and made a lot of adjustments in the last few months as we have had an election and changeover and getting started for our first session with remote committee meetings. And I do want to remind folks that when we have enough bills that, including the supplemental, that will come up from committees and get reported out, that we will be meeting in the Civic Center to hold our sessions in the Civic Center. Those will not be online. Tomorrow, Maureen, would you just remind, before we let our good folks from taxation go, just remind appropriations what we're going to be discussing tomorrow? I don't know if Maureen heard me.
I did hear you, Madam Chair. I am having, all of a sudden, everything is not clickable to get in files, so I don't remember tomorrow's agenda.
I have it in front of me. Hang on.
I think it might be.
It's HHS.
Thank you. It's HHS.
Well, so we'll be hearing again from Commissioner Figueroa and the staff members from the Department of Health and Human Services, and our Health and Human Services Committee will be joining us tomorrow instead of our tax committee.
Wonderful.
Thank you, Madam Chair. You could actually be a very good committee analyst if you want.
Oh my God, no.
Well, my job starting yesterday, it's something.
I believe we start at 10 a.m. again.
Yes, we do. So before we say so long to our tax folks, I want to thank our tax colleagues. Thank you all for coming. And we look forward to your report back, hopefully by February the 5th. And eager to hear your perspective on what we heard today. And we'll say so long to you and just keep the appropriations members on for a few minutes. So in case they have any particular questions about the business of our committee in the coming week.
Thanks very much, Madam Chair, for having us.
Thank you for coming. All right. Thank you all for your good spirits today. I really appreciate it. Senator Bailey, you want to say something?
I just wanted to say briefly, I mean, I think with the challenges people are having with information, that what would really be helpful is if whoever is coordinating with the speakers, if they could just really emphasize that. I know in the past, it's common to show up at the committee hearing and have your materials and get it passed around the horseshoe. But if they could make every effort to get their materials to the analyst or the committee clerk ahead of time, so that we do have time to either put it in a folder on our computer or print it out, however we're going to make it work. I think that that would really help a lot. And again, I know that's a learning curve for them as well, but that would certainly help me, and I think it would help a lot of other committee members if they could just be mindful of that and not wait until 9:59 for the 10 o'clock committee hearing. Thank you.
I completely agree. And I think that the tax part of this supplemental budget is by far the most complex and the most uncertain. So I think that we will have materials from the other departments sooner than we had them for tax because they were literally still working on things over the weekend. And still trying to figure out exactly what everything in December means. So it looks like, but I appreciate what you're saying, and we will reiterate how important that will be for us to the DAS commissioner, so she can pass that on to her commissioners as well. It's a great idea. Representative Corey has his hand up.
Thank you, Madam Chair. I think that one place, at least where I was really getting lost, is in how our naming conventions for the files that we are receiving via email. Like, what I notice is that, you know, where we have like the date, then tax, then attachment C fully spelled out, and then, you know what I mean, whatever's in it. In my Outlook, it only shows like, you know, like a very short portion of what that name is. So, you know, if it's like attachment A or attachment B, I don't see any of that. All I saw was the date and the words like tax attached. So I'm wondering if we can front load, you know what I mean, some of these file names, do you know what I mean, in a manner that, you know, better describes what the actual document, do you know what I mean, is, as opposed to sort of all of that other information. And I love having the date in the file name, but I'm just wondering if that could go more at the end and the file relevancy at the beginning.
Thank you. That's a great suggestion. And I think if Maureen is in receipt of those documents in advance, that would make it much easier for her to do that. But these came in.
Actually, Madam Chair, I renamed them because I thought the date would help you the most. I thought, which are the informations that you need to see the most? I thought, well, first the date, so you know you're in the right day. Then the joint committee that you're with, and then, but I certainly could rearrange it. But no matter what we do, there'll be something that will confuse you. I guarantee. Plus, you can widen. Sometimes you can widen what you see in Outlook as far as. But,
I think. I so appreciate that. And I think just deciding what you're going to do and just continuing to do it the same way would be the biggest thing. To have you move back and forth would be almost more confusing. So maybe the chairs and the leads can kind of talk about that. And
whatever naming thing you guys want, you just let me know. We'll try to be consistent in the future.
Thank you. Thank you. Representative Cardone and then Representative Cloutier.
Just wanted to say that I did not receive the Zoom link this morning for this session. Teresa ultimately forwarded one to me and I got on, but whoever is in charge of sending out the Zoom link, could you make sure that I'm in that mailing list, please?
Thank you.
I will check the list again and make sure that it's correct.
Thanks, Mandy.
You're welcome.
Representative Cardone, I just want to suggest also to make, maybe you already did this, but is to just check your junk, your junk folder sometimes.
I did.
Okay. Way ahead of me. Thank you. Representative Cloutier.
So I just wanted to follow up on Representative Corey's question about the naming. And I was having the same problem. And then I realized if I hovered over the naming, that it then brought up the full title of the document. So then I was able to follow along and figure out which one was A and which one was A1 and which one was B. So I don't know if that's I'm on a Mac too. So I don't know if that would work for you.
Thank you. Anyone else have any questions or tips or comments? Representative Hymanson.
I was thinking of another tip. If you leave off the 21, just put the month and the date. It might shorten it. Understanding we all know that it's 21, but that's my brilliant suggestion.
That's an excellent point. As long as you all know what year it is, I think we can safely do that.
Yeah. Thank you.
I make no promises.
Any other questions, tips? I'd like to just ask if briefly, if the leads are available to talk for a couple minutes after this about some planning for the biennial. Maureen has a suggestion for the different blocks and a couple of other things that we'd like to run by you before we kind of pull the trigger on publishing a schedule. I think we need to do the schedule. We need to post it, Maureen, by when?
Not next week, I believe it's the week after next, depending on, of course, your date that you want to start the hearings. Obviously, that's 2 weekends of advertisement, and the deadline is the Wednesday before that weekend, so.
Okay. Senator Davis, are you available for a couple minutes?
Yeah,
Great.
certainly.
Thank you. Representative Millet, are you available for a few minutes?
Absolutely.
Thank you. That way we can at least all look at the same thing and mull it over before we make any decisions. That would be great. All right. Well, other than that, I would say thank you all for your attention and for your good humor and patience with me today. And we'll see you tomorrow at 10 a.m.